All right, well, there you have it. Well, getting ready to get started. Getting ready to get started. Alright, here's what it is. Hey, this is James, everyone. This good evening. What day is today? Uh-oh, stop recording. Stop that. And get you out of there. And here we go. Here we are. Yay. Alrighty. Good morning, good morning, good evening, good evening. How are we doing today? Jerry, what's happening? Lucky Larry's here early tonight. Well, alrighty. Way to go. JD's here. Jason. How do you pronounce that one? Hello, good evening, sir. I'm going to call him Mr. Wang. Is that Zhao Jun Wang? Cool. Alright. Brandon's here. Way to go, Brandon. Jim, Bibby, how's it going there, Mr. Jim? Elvin, what's happening? Wiz the Trader, CDT. Right to it. Not a hi, hello, how you doing? Nothing like that. Just plain CDT. Okay. Here's what it is. No options. That's a no. Sorry, dude. The Wiz Trader. Hello. Michael, how's it going? Bass player. Or is that bass player? I'm going to play bass. I'm going to go fishing. Alright, anyway. Michael David Robinson. Good evening there, young sir, and how are you today? Oh, gotta change my camera. Camera angle. There we go. Come on, there we go. And there we have it. Alright, so we're getting ready to get started. So here we go, here we go, here we go, here we go. Alright, it is August 8th. Top stories, how's it going? August 8th, 2024. We're officially into week number 32 for the year. Week 32 for the year. Wow, 32 weeks already gone by. Anyway, second week, second month, third quarter. Okay, interesting. So, what's happened today? I have no idea. Well, let's check it out. See where we are. Jump on in really quick and go from there. Alright, taking my book from last night where we left off. UNH is first on the list. UNH first on the list. UNH, University of New Hampshire. Well, actually, it's like something health company. 566. Yeah, 566 a bit on the high side. And the 565 is going for 85. Cool beans. Well, a year ago she's there, 503. Bottomed out at 435. Topped her out at 590. Interesting. Yeah, that's kind of high for me. Look where she is. Okay, she made an all-time high just a little while ago. That thing looks like she'd crumble any day now. And I don't want to be anywhere around, especially at $500 a share. Still a fan of ENB with years of dividends and potential. Big Brian. ENB, huh? ENB. Did we take a look at this? Yeah. Don't get me wrong. Hey, it might be a great company. I just don't. I personally don't like monthlies because they just don't pay the same for the strategy, which I do. Okay, I buy a stock, sell a covered call against it. What does silver do in the recession or crash? Good question. Now, I buy a good company, I grab a 1% off of it, and then I just move on to the next one. But I'm very particular which companies I use. Tyler, encourage more viewers to share. Yep, like, share, all that kind of stuff. Okay, thank you. I get it, but if you like the company, well, now is not the time for buying it because it's at a high. Now's the time for thinking about selling it. Because look at the movement. Down, up, 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 down, up. And look where she is now. Okay, she's getting ready to come down again. So, if you think of it logically, could it keep going up straight? No. Because you're 34 and a half, and now she's up to 38 and a half. Well, that's a $4 increase. That's over 10%. Anytime I see a 10% increase, I'm out. But that's me. You guys got to figure out what's best for you. That being said, yeah, ENB is always going to be a no. Sorry, dude. You know, if it was something better, maybe it is what it is. All right. Next on the list here, GSAT. GSAT. I know gold holds, but silver is more erratic. Yep. Thank you. 7% dividend. Okay. Lovely. You go collect your 7% and I'll stick with my 50%. I'm perfectly okay with that. You know, yeah, I have to work a little bit harder than you do. You just buy the stock and just do nothing from there. Me, I gotta have something to do. So I trade on a daily basis, or I look at it on a daily basis. It moves, I take it. It doesn't move, I don't take it. It's simple. It's strictly by the numbers. You know, if this happens, then we do this. If this happens, then we do that. Okay? There's always a perfect time to jump into a stock, and there's always a perfect time to jump off a stock, especially considering stocks only go up and then they go down. But hey, you want 7% per year, more power to you. I like 50% per year, but that's just me. Anyway, let's move on. Is that right? BAA? No, I guess so. BAA. BAA is next on the list. BAA. Never heard of it. No options. Go figure. Dell. Ooh, I actually have me some Dell. Okay. Look at that. Dell looks like it may have hit a bottom. What percentage do you make back a year? Over 50% per year, Hayden. Okay, 1% per week comes to over 50% per year. We're looking at Dell. Okay, I like Dell. Look at the number, 92 bucks. I could buy Dell for 92 bucks. Bro, about that silver bullion, I guess gold bullion, yeah, what about it? 93 bucks. Oh, sorry, 92. Okay, the last trade was 91.46. The bid 91.70. The ask 92. Okay, so currently the 92s are going for 285. That's nice. That's over 2.5% for the week. But there comes a question. Okay, nice big fat premium. Look where she is. She has this big drop here. But look what happened today. All right, let's go over the numbers. A year ago was the bottom of the year at 53.89. The top of the year was on the 30th of May, and that was 179.70. Is that right? I thought it was like 180. No, 179.70. All right, so that's the high. Now from there, she's just been dropping and dropping and dropping. Look where we are now. Apparently, it looks like yesterday is the new 30-day bottom. Great. If you're going to make money in the stock market, you're going to buy low and sell high. And you're going to buy a good quality company. Dell's been around for decades. I grew up working on Dell computers. But here you go. Look at the last 90 days. Take the last 30 days. Even the last 30 days telling you the same thing. 30 days ago was a 30-day high. Yesterday was a 30-day bottom. I personally like 2 days to the upside before I think of jumping in. But look at the numbers you can get out of it. You know, the 92 is going for 285. I want to find out what that is. Okay, clear this. 280, is it 285? 285. $2.85 a share divided by the purchase price, 92 bucks. That comes to a grand total of 3.09. It's almost 3.1%. That's nice for 1 week. Think about it. That's crazy. Can you imagine what 3% a week? And it's 52 weeks in a year. Wow. All right, so I like Dell, and I do happen to have some Dell, so I'm okay with that. So personally, like I said, I like 2 days to the upside. Let's see what this thing normally does this time of year. For that, we're looking at the seasonality chart. Okay, that looks almost just like Apple, doesn't it? In January, it just slowly escalates all year long. No big jumps, no big moves. The blue line up there represents this year. Okay, far left is January 1st. Far right is December 31st. So it's a whole year of chart that you're looking at. Wow, I got missing quite a bit. Nope, I want to go that way, right there. There we go. That's a little better. Anyway, but that phone. So anyway, I want to see this area right here. This is where we are right now. Second week of August. See, August right there. Second week. I want to take a look at that area. But I don't really need to, because what does the stock do? You know, it just slowly creeps up throughout the whole year. That's Dell. Now that's 10 years worth of history. How it moved consistently, 2014, 2015, 2016, 17, 18, so on and so forth. You have 10 years of data and tells us that's what it normally does this time of year. Okay, blue line is is right now, and that's just 10 years of history averaged out. Interesting that yesterday Dell volume was over double the average volume. I don't find that odd. Okay, yeah, look at the volume yesterday. Yesterday the volume was huge. We hadn't seen volume like that in quite a while. For Dell, I mean. Because look at all the movements in it. And the volume I'm talking about. I'm not talking about the stock price, I'm talking the volume. Okay? Up, down, up, down. I've never seen volume like that. You know, like a steady pace. Anyway, if you buy something right now, what would you buy without a blink? Macy's. Ribbon. No, I'm going to ignore that one. I don't do Ribbon. They don't have 20 years of increased dividends. Reacted off super micro earnings. All right, Tim, I have no idea what you're talking about, but the 9 to 5 takeover. Hello. All right. So that's Dell. I like Dell. I actually do own some Dell at the moment, but don't get me wrong. As soon as she moves up, even a tiny bit, I'm out. I'm looking for just 1%. And where she is now, I got no problem with it whatsoever. Are you 21? Yes, I am. I have no idea what that means. Next on the list. Ford. You all knew we were going to get to Ford eventually. Now, Ford, again, one of those companies that's over 100 years old. They're very stingy on the premiums. Is the name, is the store. RUE21. RUE21. What is that? Oh my God. So I knew it was too good to be true. I went through the whole week and only got named Tesla like 3 times. Here's number 4. Will Shopify keep climbing? Is the name of the store. Yeah, I got that. RUE21. Yeah, okay. I have no idea what the stock symbol is. RUE21. Holy cow. It has no options. RUE21. I have no idea what that is, but it says it has no options. So that's going to be a no. Sorry, I looked. So we're going to take a look at Ford now. Now, Ford, like a lot of the big older companies, I'm talking about the ones over 100 years old, they get a little stingy on their premiums. Okay? The premiums here, look at the 1019, the closest one's going to be the 10. It's going for 28 cents. But once you take off the 19 cents off of that, alright, and then you're walking away with 9 cents. Is that right? That can't be right. Take 19 off of that. Yeah, you walk away. Yeah. They don't pay the 1%. Check Ethereum right now. Now, I'm pretty sure Ethereum is cryptocurrency. And I said a long time ago, I don't do cryptocurrency. So I don't know why you're asking me to take a look at cryptocurrency. It's just one of those things. Why would I do that? Sorry, I'm trying to figure out what's going on over here. Oh, there you go. That's interesting. Tap to watch live. There we go. Oh, look at that. Now I get to watch myself live over here. Okay. KB, hi. Since you're talking Ford, what do you think about Toyota? They had good earnings and still didn't grow. R, you're going to have to give me, what is this ticker symbol? It's not T, I know that much. I made good money on Hood today, bought 1698 stock, sold for 17 on 5,000 shares, and still holding 2,000. Well, alrighty, Mike. Not quite sure what that has to do with the conversation, but okay. Is what it is, you know, if you're doing good on that, why not? Okay, so that's Ford. A year ago, Ford was at 1286, bottomed out previously at 967, and that was back in October. Okay, back in October. Then she reached a high on July 18th. Okay, so July 18th. So we know where the bottom is, we know where the top is. Look at this gap right here. Now, for the most part, most companies have a tendency to fill gaps. Toyota is TM. All right, I'm writing that down. TM. All right, so Toyota is written down. We'll take a look at it in a little bit. Next on the list, Ford. Okay, so if it's only paying, that kind of a premium, why bother? Well, here's the reason why. It's over 100 years old. They've been around for a long time. Ain't going anywhere. M-U-L-N, you say. M-U-L-N. Never heard of them. M-U-L-N. Mullen. Okay, we'll take a look at it. How's it going there, Doc? It's a monthly. That's a no. Well, thank you very much. Is there a TV on in the background? Yes, there is. Alrighty. Sorry about that if it's interfering with the noise. But, I don't edit anything. So if there's a dog barking, if the phone rings, you'll hear it. I don't think I should have an edit button. What about long-term option calls on Ford? 6 months to a year. Okay. Are we talking about buying or selling? December 2026. The 11s, actually 1182 is going for $1.47. The 9s, $1.47. Yeah, there's not much money there either. Sorry. Selling? Oh yeah, if you sold them. But then how long do you want to hold on to it? And then by the time you figure out how long you want to hold on to it, you got to do the math. If you're going to hold on to it for a year, are you at least getting 52% for a return? Probably not. Or how about even a 20 or 30%? Okay, you have to take into consideration time and effort put in. The more time you sit in front of the computer, the more you're going to make. Besides small cap analysis, isn't everything following the same QQQ trend in the same pattern? Not necessarily so, because when some companies go down, other companies go up. The money just doesn't disappear. It goes somewhere. Alright? So you got to keep that in mind. It goes somewhere. Don't know where it goes all the time. But when something is down, something else is up. Okay? It's like a balancing act. Alright, so what was I talking about? Oh, so what I was talking about is whenever you invest something, the more time and effort you put into it, the more money you can make. Also, XRP predictions. I don't do XRP, sorry. That's the stuff like Lumen and small pops. What? That's the stuff like Lumen and the small pops. No idea what the hell that means. Okay, XRP. No, I don't do cryptocurrency at all. Okay, so I can't help you out with that one. So as I was saying, if you want to sit and do that kind of a trade, sell or buy something further out, great. You're still trading time for money. Well, the more time I sit in front of my computer, I'm only spending a half hour, maybe 10 to 20 minutes a day in front of the computer doing my own personal stuff. Okay? XRP is going to be one world currency, so you should. You're absolutely probably right. Eventually. But not at the moment. So why would I time my working capital? You see, some people don't understand this. I get 50% a year on my money. So if I take that money out of the rotation, so to speak, and put it into something else, I'm then I have to go get a job, and I don't want to do that. And I know it sounds like I'm whining, but I've been working since I was 13. I'm kind of enjoying the retired life, so I'm perfectly fine with 50% per year. Now, you can't guarantee me that that cryptocurrency, there's a way to get weekly cash flow on a consistent, predictable basis. So until there's a way where you can get consistent, predictable returns on that money with crypto, fine, I'll take a look. If I can take crypto and I can go down the street and buy a cup of coffee, fine, I'll look. But until then, it's just a fad. It's going to go up, it's going to go down eventually. I love the idea of cryptocurrency. I love the idea of it. Get it out of the hands of the bankers and the corrupt politicians. Yeah, there's going to be a few glitches here and there, but that's the same thing with any technology until you get it ironed out. But you take the money away from the institution and give it to the people, hey, it's our mess, let us figure it out. That's my philosophy. What the hell do I know? But anyway, yeah, I don't do any cryptocurrency until it becomes legal tender. Sorry. What about Mara? Well, we're going to take a look at Mara pretty soon. Okay? But is buying Rockstar Game stock before GTA 6 releases a good idea? Dude, I honestly couldn't tell you that. Okay, you're definitely talking to the wrong person about that kind of stuff. I'm at that point in my life where I'm 60 years old. 60. I don't want to have to go back to work if I don't want to. Okay? I have a small amount of money. I take that and I invest it on a weekly basis, and that gives me 1% return per week. Now, I've been doing that for over 15 years, and people always asking, Jim, what are you doing? I don't do a heck of a lot of anything. I kind of like it that way. I stay out of trouble. I keep my nose clean. I stay under the radar. People leave me alone. I like a life like that. I get to hang out with my kids. I get to hang out with my grandson, go to the beach, do whatever I want, and I keep a very low profile. That being said, let's take a look at Mara, M-A-R-A. I actually have some Mara, M-A-R-A. Yeah, so if you're here looking for anything other than a safe, predictable, consistent 1% per week, you're in the wrong place. Now, if you're looking to find a stock that's going to go from here to here, yeah, you're in the wrong place. This is slow, this is boring, this is methodical. This is only 1% per week, okay? If you don't have 10 or 15 minutes a day to put into your personal finances, well, this might not be for you. But if you look at it this way, at some point in time, you are going to retire. So all the money you accumulate in your life, you have a couple of choices. Do you give that responsibility to someone else, or do you take that responsibility for yourself? Well, take a look at what the ETFs are paying. Take a look at what most money managers are paying. Take a look at what the average funds are paying. Then ask yourself, if I do it myself and it is possible to get 50% per year, why wouldn't you? It's your money, don't you think? Simple, safe, predictable, and consistent is a good idea. I like simple and safe because I work very hard for that money. Though granted, not a millionaire by any way, shape, or form. I have enough to live comfortably off of the 1% I get on a weekly basis. I'm just sharing my trading with you guys. Now, I'm not a professional trader. I'm not a professional anything. Okay, the only license I have is a license to drive a car. So anything I say, it's not a recommendation. It's just me passing on something that I'm doing and just letting you see what I'm doing and give you my opinion of my strategy, which was created for my 9-year-old. It had to be simple. It had to be safe, predictable, and and the profits had to be consistent. And in fifth, and the big one is she couldn't lose. Why is that the big one? Well, if a 9-year-old little girl loses money, she's going to cry and daddy's going to feel like crap. Just the way it is. Girls cry, dads feel like crap. And then mom gets involved. And then that couch, even though it's kind of comfortable and we want to pretend like it's a bad thing, yeah, it ain't that bad. But yeah, the couch is going to be my place for dwelling if my daughter loses money. So, simple, safe, predictable, consistent, and no way to lose. That's the criteria I had to come up with. So the trading strategy I came with 5 simple rules. It had to be simple. Remember, you're 9 years old. Never buy something you don't want to hold long term. Never sell at a loss. Make sure the company has consistent increased dividends to the shareholders. That way you know They are consistently profitable because the dividend is a portion of the profits the company passes along to the investors. And that's you and me. We buy and sell the stocks, we become the investors. 4, make sure it has weekly options because I want weekly income. Okay, I really don't care about capital appreciation. That's nice for the younger folks. Sorry, I know when it's time to get off the merry-go-round. Okay, so let's go on to Mara and we will move forward. So hopefully that answers your question. All right. Yeah, so buying Rockstar game, yeah, I can't answer that question. That sounds like a capital appreciation act. You're looking to buy a stock and waiting for it to jump and then take your profits. Okay? Yeah. I don't play that game, and I really can't give you advice on that one because I know nothing about you. Nothing. All right, so we're going to take a look at Mara. A year ago, Mara is sitting at 1568. It drops right around October, 704. That's the bottom of the year. Oh, I love a good sneeze. Ooh, that was a good one. The high of the year was in the end of February, and that was 34.03. Now, from there, she drops down to a channel, goes sideways for a little bit, and I hate saying sideways because stocks don't go sideways. They go up and they go down. Up, down, or nowhere. Anyway. All right, the last 30 days. Now, the last 30 days I find, in my opinion, to be the most important. Okay? Because it gives you an idea of what the public, the buying power, that's me and you. We are the buying power. We are the ones who create this mess. We decide, oh, it's too low, or oh, it's too high, or oh, it's this high, I'm taking my profit. This is what me and you decide, the buyers and the sellers. Okay, when we buy, great, the stocks have a tendency to go up. When we sell, the stocks have a tendency to go down. But the funny thing is, we're always thinking of buying and always thinking of selling. It's just that when I'm thinking of selling, you're thinking of buying. And when I'm thinking of buying, you're thinking... So it evens out. I mean, there's always buyers and there's always sellers. So it all depends on where are you on the teeter-totter. Are you on the upside? Are you on the downside? Because that's all they do. They go up, they go down. They go up and they go down. Okay, me, I love it. A 30-day high, a 30-day bottom, and she bounces off 30-day and goes to the upside. Okay, there's our bottom right there. And our top was on the 17th of July, 2730. Our bottom was this past Monday. Okay, the Monday that just passed. And that was 1366. So we had 3 days past the 30-day bottom. So you're going to make money in the stock market, you're going to make it buying low and selling high. So if you buy a good company or you select a good company, you don't have to buy it right away, just select it. And when the timing is right, and what do I mean by the timing? There's only 2 reasons the stock moves. Okay? A stock is going to move for one of 2 reasons. A known reason, something we know about, okay, or an unknown reason, something we don't know about. So there's action and reaction. If you know something's going to happen, well, you're going to take an action. All right, so if you don't know something, you're going to have to react to it. So what do I mean by that? That means by something like a hurricane, tornado, an act of war, an act of nature, something like that creates, that wreaks havoc on some kind of a company, make it go down, like the Exxon Valdez when it crashed, or British Petroleum when it sprung a leak in the Gulf, or Apple when they had that big huge lawsuit. These things we don't know that are coming. That's unknown reasons. Okay, and it affects the stocks. But then again, there's the known reasons. A reason you know that the stock is going to move because it does it predictably. So what is that? Well, there's certain things you know, like an IPO. That's a known reason. There's it's coming shit. I don't know what it is. It's someone. All right. Known reasons. I forgot. Like an IPO is a known reason. A split. News, not certain news, but but news that you've been following for a while, something they tease you with. Acquisitions, that's a good one. No, acquisition is an unknown reason. Yeah, so a known reason, also something like seasonality, or dividends, or earnings, something you know that's coming that happens all the time. Earnings reports comes out a certain time every year. Dividends also. Dividends come out every single year. Now, the companies that I like have 20 years of increased dividends. Now, 20 years of increased dividends tells me that they're consistently profitable, because a dividend is a portion of the profit to the shareholders. That's you and me. So if I'm getting higher and higher dividends every year, well, the company must be making more and more money. Because in order to give out more and more money, you got to be bringing in more and more money. It only makes sense. So I don't need to follow all that crap about, this is just my opinion, of course, of the quarterly reports, news articles, or any kind of crap like that. Anything that takes my mind off of what I want to do. I don't want to sit there and read reports. No, thank you. But here's the thing. If the company is consistently profitable, well, the easiest and quickest way of looking is, did they increase their dividend? The shares to the shareholders. The profits to the shareholders. Did that increase? Well, if that increased, they must be making more money. Great. Those are the companies I want. Now, there's over 9,598. We actually looked yesterday. Okay, just shy of 9,600 companies that you can invest in any moment in time in the stock market while it's open. 9,600. That's a lot. Okay, so half of them are going to take their profits and put it back into the company for capital growth. If you're looking for capital growth, you're in the wrong place. I don't do capital growth. I do strictly income. I want a safe, predictable, consistent source of income. And mine just so happens to be 1% per week. Okay, I'm getting pretty damn good at it, and I'm sharing it with you guys for free. What else was I saying? This getting old shit's no fun. It isn't. You forget the simplest things. All right. What was I saying? Oh, so once you get your list, now my list consists of the Dividend Kings, 50 years of increased dividends, Dividend Champions, 25 years of increased dividends, Dividend Aristocrats, again, 25 years of increased dividends, but a couple extra rules thrown in there. The Dividend Contenders, okay, 10 years to 24 years of increased dividends. And then, of course, Warren Buffett's stock list, because, hey, if it's good enough for Warren, it's good enough for me. That's my list, and there's about 300 companies on that list. So what does that mean? That means 9,500 and 9,000 whatever. I only look at 300 companies. That's it. Okay? Now, I don't look at them all at once. I stick them into the calendar, and the calendar tells me exactly when they pay their dividend. Because if a stock is going to increase in value just before the dividend, and these little green dots represent what the dividends are, what dates the dividends are, then Johnson & Johnson, Phillips 66, Wynn Resorts, UPS, Chevron, U.S. Steel, Alcoa, Apple, Capital One Finance, ConocoPhillips, so on and so forth. You probably heard of every single one of these companies. Well, those are the only ones that I invest in because they're consistently profitable. Okay? Now, they don't make huge dividends. No, that's not what I'm looking for. I'm not looking for the dividend. I'm just looking for the fact that they increase that dividend consecutively every single year, because that means they're going to make more next year than they did this year. That's what I'm looking for, a well-run company. Now, once you take a well-run company, 300 of them, and throw them into the calendar based on when they pay their dividends, that tells me when to start looking at the company. Okay? Because you ever hit Johnson & Johnson on the 27th. I want to go 2 weeks before this, 1, 2, and I want to do it on a Monday. Okay, I'm going to be looking at Johnson & Johnson on the 12th, which is next Monday. All right, and if everything looks good, what's that? Well, let's go take a look. Put in Johnson & Johnson, J&J. First thing I always want to look at, the high, the low, where was it, where is it, and which direction is it going? That's the first thing I want to look at. And that takes less than 3 seconds. I mean, think about it, 3 seconds. High, low, where was it, where is it, and what direction is it going? It doesn't take that long. A picture paints 1,000 words, something like that. Okay, so that's the first thing I want to see. Now I want to make sure, see the high is way up here, so I don't want to be anywhere near the high. And it's not. The bottom is way down here, and I don't want to be anywhere near the bottom. okay? But we're somewhere in the middle. Perfectly fine. They're actually going to a place where they have been before. Okay, they're not trying to make a new high and not sinking down to a new low, somewhere in the middle. Okay, great. That part works out. Wonderful. Next, I want to take a look at the numbers. Make sure the numbers work. If I'm going to buy the stock, well, at the top we have all our stock information. Okay? The last traded price, the bid, the ask, the volume, the open, the high, the low, the close, all that stuff. The top is stock information. Now, everything below the stock information, this is all option chain. Now, Johnson & Johnson happens to be a dividend king, more than 50 years of increased dividends. Okay? Also, a centennial. Been in business for over 100 years old. Okay? Now, I can buy it tomorrow morning. See the price right up here? $164. Now, if I sell somebody my rights, okay, through what is called a stock option, I can sell a stock option against the shares that I own, because you have to own the shares first before you can sell an option against it. So if I buy the stock, sell my rights through a covered call with a call option at the money at the exact same price I paid for it, which is $164. Okay, well, Johnson & Johnson just so happens to not have a $164 because they're in $2.50 increments. What does that mean? Well, it means 150, 152.50, 150, 155, 155.75. All right, well, 157.50, then 160, 162.50. 165, 167, so on and so forth. $2.50 increments. The closest one's going to be the 165. Look at the price, 37 cents. Definitely not worth it. It may be a great company. It's too hard to admit it. Okay, Neil, I have no idea what we're talking about. Let me see if I can back up and see some of these questions I may have missed. All right. Neil, I have no idea what you're talking about. Okay, but anyway, just because Johnson & Johnson is a 100-year-old company and a dividend king and consistently increase their dividends, if I'm buying it and I'm trying to do this play, yeah, it doesn't work. It doesn't work with every company every week. You just have to pick and choose. Okay, it's really not that difficult. It's too hard. Neil's saying it's too hard. It's really not, Neil. Okay, you go to Google and you put into the search engine Dividend Kings List 2024, and it will find you that list. And then you go and you put into the Google search Dividend Aristocrats List 2024. Boom, that'll show up too. And you do the same thing with the contenders, the same things with the champions, and the same thing with Warren Buffett's stock list. I know, Facebook for 15. I have no idea what that means. Anyway, so those 5 lists, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, those 5 lists will give you over 300 really good companies that have consistently increased their dividends for over 20 years or more. But that's my list. Okay, you guys got to figure out what works for you. You know, I like the fact that companies have 20 years of increased dividends, and there's enough of them. There's like 300. 300 is more than enough. So if you take a good look at my calendar, all right, every week. Now this is just one list. I have other lists. Okay, take a look at this week here. Alcoa, Apple, Capital One Finance, ConocoPhillips, U.S. Steel, BTU. Damn, what the hell is BTU? Uh-oh, I gotta stop on this one. What is BTU? Peabody Energy. Cool. Consolidated Freight. CHK, I don't know that one. Heineken Payne, Eli Lilly, ExxonMobil, AMGN, Honeywell, Starbucks, Walmart. That's just this week here. Now remember, I buy 3 or 4 companies a week. That's it. Okay? I can find more than 3 or 4 of these companies that are worth buying. Now, I'm only looking for 1 or 2 of these companies to go up 1%. And just before the dividend, they usually do. Okay, after that, this week, take a look at this one. Chevron, UPS, Win, Phillips Petroleum, Archer Daniels, MPC, what's that, Moody's? I don't know. Marathon, Target, KC Homes, and CMI. Okay, all those companies up there, I have no problem buying and owning any one of those. All right, what are we looking for? Richard Bruner wants to take a look at coal. Holy cow, 94 messages. Oh, I gotta stop gabbing and start answering some of these questions. Oh, why did NQ go down 1,000 points the other day? NQ, I've never heard of them. So if I've never heard of NQ, I have no idea whatsoever how to tell you it went down. NQ Mobile Inc. Yeah. Sorry. Macy's. Alright, so we're going to take a quick gander at Macy's for Mr. Gallant. Way to go, Gallant. Macy's, here we go. A year ago, here we are, 1580. Bottom of the year was in October at 1047. Topped out the year the middle of March. Closer but better. Okay, Neil, still clueless. Last 30 days for Macy's. Here you go, last 30 days for Macy's. Now this is what I like if you know what it is you're looking for. 30 days ago, a little over right around 1960. Got a big drop here, big gap down. Way over here in around middle of July, big gap down. And then you have two more gap downs right here on the 1st, the 2nd, and then between Thursday and Friday and Monday. 3 gap downs in a 30-day period. Yep, Macy's. Way to go, Mr. Neil. I'm glad you approved, Neil. Really. Okay, so that's my 30-day bottom. Okay, 30-day top, 30-day bottom, 3 days to the upside. Okay, so isolating a 30-day bottom, you have to figure out, bloody not this week. Sorry there, Neil. So you got to figure out what signal it is for you to identify a 30-day bottom. Get your 30-day top, well, that's pretty easy because it was 30 days ago. Nothing else was that high. 30-day bottom, well, here it is, 3 days to the top side. Me, I like 2 days. 2. I would have jumped in this morning, but my money's all gone. What technical indicators do you use on your charts? Chris Jones, I use absolutely no indicators whatsoever other than, the 2 little things that God gave me. It tells me where the high is, it tells me where the low is. Okay? Now, when she drops from a 30-day top to a 30-day bottom, more than likely it's going to retrace because that's all stocks do. Stocks go up, they go down. They go up, they go down. You get to a certain point, people like you and me, we are buyers, we are sellers. Okay, if we're looking at a company, such as this one, Macy's. Now, I've been following Macy's all year, only because it's a 100-year-old company, and it used to be a dividend king, which means they consistently increase their dividends. I'm not 100% sure what they're doing lately, but I leave it on my roster because they have name recognition that you cannot buy. Okay, if you're a brand new company and you're trying to get name recognition like Macy's, yeah, have at it. All right, but anyway, 2 gap downs within 30 days. What tells me is that only have 1 30-day high and 1 30-day bottom. Here's the 30-day bottom here. And if you're going to make money in the stock market, you're going to buy low and you're going to sell high. Find a good company, put it into your little roster, and every time you get an opportunity that looks like this, you take advantage of it. When it goes up 1, 2, 5%, whatever you decide. For me, it's 1% per week. Okay, I look for these opportunities all the time, and it's always, always, always based around when they pay their dividend. Okay, because stocks have a tendency to go up just before the dividend is paid. So that being the case, why not jump into it then? NVDA might throw up $100 from there. All right, Neil, I don't look at that company, so all right. NLY. $20. 2020 to 2050 is going for 6. No. Sorry, dude. But those numbers just don't look that happy. Maybe 21. Take 21 off of 26 and equal 4. Yeah, no, the numbers are absolutely horrible. Take a look. See, first thing I look at is the high, the low, where is it, that kind of stuff. But after that, I want to go directly to the numbers. Is it going to be worth my time and effort? I'll be buying it 2021, and the 20s are going for 26. But you take the 20 cents off, that leaves you at 5 cents. 5 cents on a $20 stock? No, it's supposed to be 20 cents on a $20 stock. Okay? So NLY is going to be a no. Sorry. Dirt Farmer, how are you doing? Darren, you told me buy ODTE options and I lost all my money. Well, that sure as shit wasn't me, dude. Okay? Number one, I don't like O. And DTE, don't do them either. So I don't know where you got that information from. NLY stock for Divvy. Okay, Tony, I just looked at the numbers. The numbers for that doesn't work for me. If it works for you, more power to you. What do I think about QQQ going to do? Yeah, hold on, I'll get to that one. Alrighty. What's the method I joined late? Oh, dividend capturing using covered calls on dividend stocks. Okay, so what we're looking for is a safe, predictable, consistent 1% per week. Switch to dividend stocks and long-term holds. Slow, steady wins the race. All right, Cope. Now, I'm not sure what you, but my opinion of a long-term is 30 days or quarter, 90 days. Can you look at run? Run? Okay, docs. Docs. I never heard of docs. DOCS. Yeah, sorry. Docs is going to be a no. It's a monthly optional stock. And what does monthly optional stock mean? It means I can only do an option trade once per month, and that's just not enough for me. I need weekly options so that way I can have a weekly cash flow. I can't get weekly cash flow from monthlies. Somebody wants to take a look at Eli Lilly. 845. Well, I'm going to say no for a couple of reasons. Number one, it's out of my price range. And I'm brutally honest with you. I can't do an $800 stock. I can't. 849. Okay, so the 850s are going for $14. Okay, so what kind of return is that? 845, the 850s, $14. And I divide it by 850. Divided by 850. And it comes a grand total of 1.6%. If you got the money to do that, more power to you. Like I said, it's out of my price range. 100 shares is $8,000. No, wait a minute. No. 100 shares is $80,000. Anyway, besides the point. Let's move on. It's all tap. I don't know what that means. Tony P. already did NLY, buddy. I really did. Can you show single click covered call? Sure, why not? Here we go. Div play Yan call? What the heck is that? Never heard of that one. Have you learned to fight your emotions and do the opposite? Rad Dad. Not quite yet. Fang? Never heard of Fang, Barney. Alright, so what are we looking at? Alright, NLY, we already did that. Rules no. Rich wants me to show a one-click covered call. I know he wants. Tony, please don't ask that again. NLY, how many times you want me to check it? It's still going to be a no. Which stock are we looking at? We were just looking at Eli Lilly. Now, Eli Lilly's out of my price range. Okay, Rad Dad, we already looked at Mara. Or better. Earnings or management signals? Earnings or management signals? Okay, Rad Dad, I'm not 100% sure what you mean by earnings or management signals. I'm not quite aware of that one. To think owned Mara under $1 and sold it. Oh, go on, it's part of the game. Anything reporting tomorrow? Don't know. Acquisitions. Haven't looked at 3M in a while. You're right. Have they shifted their dividend? Yes, they have. We're going to take a look at 3M. Why not? We haven't looked at 3M for a while. 3M. 1, 2, 3. Now, 3M is going to be no, not this week anyway. Let me take a look. That big, huge jump right there, all the way to the top. Yeah, that's a little too high for me, especially when a year ago it's at 70, and now it's close to 130. That's close to 100% increase. That's probably what, 90, 95. You're either going to sell too early or too late. It's all about looking for the next up. Chris, I appreciate that. I couldn't have said it better myself. Because you are, and he's absolutely 100% right. You're gonna buy something, it's gonna drop to the floor, and then you're gonna buy something, and it's gonna shoot up. And then there's other ones you're gonna buy, and they're gonna go absolutely nowhere. There's no real rhyme or reason to anything. Okay. Plowback ratios are helpful. Okay. He doesn't hold long for weekly premium income. You're right, Bamarat Redneck. Poseidon's last molar. Any guess at how much of a king's increases is tied to inflation? That I honestly don't know. You're doing great. Thanks, Raddad. Billy Blue Guy. Is it generally speaking true that in order to actually generate a good amount of income through dividend stocks, you require a large bankroll? Well, Billy Blue Guy, it's all in perspective. Okay? Your idea of a lot of money is some people's idea of chump change. Okay? I had a friend of mine, he had more dollar bills and the value of his pinky ring and his watch than I make in a year. What does that say? It doesn't say anything. Okay, so it's all relative. You know, believe it or not, here in America, we're already richer than half the population of the world. You know, the roof over your head, you have internet access, food in your refrigerator. Well, you're already richer than more than half the people in the world. So how you live is going to be totally up to you. So how much you bring in to satisfy your desires for whatever lifestyle you lead is going to be totally different for everybody. Okay, I live very comfortably on what I make. Okay, where other people might think that might be poverty level. Other people in the world might think I'm rich. It's all subjective. You have to figure out what's right for you. Find a trading strategy that helps you get to that level, however long it's going to take you to get there. Whatever your goals are, it's different for everyone. Dividend stocks, you require a very large bankroll. Not really. Okay, what software is that? It's not software. That is Think or Swim, which you can download for free on the internet, or a fund. Jay, I don't do funds. I haven't met a single fund that ever paid over 30%. Getting easiers. Okay. Schwab. Yeah, Charles Schwab owns it now. What about dividend risk? Hey, Chris Jones, all right. My goal, okay, now I'm not quite sure how this fits into yours, but my goal is a safe, predictable, consistent 1% per week. You never hold dividend stocks. No, I don't. What was I saying? Damn it. Shit. Getting old ain't fun. Oh, the dividend risk. Okay, so here's the thing. I look for that safe, predictable, consistent 1% per week. Whether I get that through dividends, premiums, stock appreciation, I really don't care. Really. It sounds weird to say that. There's certain things you look for after doing things for a certain while that's easy to spot. Alright? Now, this chart here, at a glance, you can see where the high is. You can see where the low is. You can see where it was, you can see where it is, and you can see where the last 3 or 4 days has it moving. Those are all self-evident. So if I take a look at them, and I think to myself, alright, if I'm buying it at this price, selling a covered call at this price, bringing in this much money, that's how much I'm going to get. However, if it doesn't hit that, well, this company has its dividend coming up within the next week or two, and if I don't get my 1% through the premiums or the stock appreciation, then I always have the dividend to look at. So I have 3 different ways of making money when I do this approach. I can make it with the dividends, okay? Granted, it's not that huge, but even the smallest amount of profits adds up over the long term. So if you take a dividend, let's say, now here is CF right here, 50 cents. 50 cents per share. So the more shares I have, the more dividends I collect. Great. What's going on the next week? Well, the next week we have another company paying 46 cents. And then the next company you have one paying 57 cents. And then next week you have someone paying 29 and then 28. But if you consistently add every day or every week, okay, an average of 1% per week, that adds up over the end of the year. Okay? Oh, now I can do this thingy right here. Verification, just verifying I'm a normal person. Alright. So the dividend risk, it depends on how you look at it. So if I'm looking when they pay their dividend, great. There's a dividend date. So I come over here to the to the option chain. If I buy the stock for this price, sell the covered call at this price, I collect this premium over here, and that premium is more than the dividend, or more than 1%, or more than 2%. Well, I really don't care. Dividend, capital appreciation, or dividend, capital appreciation, or stock increase. Okay? I don't care which one it is. I'm just looking for that 1%. And if you do it right, okay, it's really not that difficult, especially when you come up with, I came up with 300 companies. Now, I set a high standard of 20 years of increased dividends. If you cut it back to like 10 or 15 years of dividends, well, then you'd have like anywhere between, 300 and 1,000 companies to choose from on a weekly basis. How many do you really need to look at? Well, I only need a few that are consistently profitable. And the ones that the ones that I've been trading for years are consistently profitable. Most of the companies I look at are over 100 years old. They've been around. Okay, they've seen a lot of crap, and they still won't pay out dividends. I still got a lot more questions to go. So I really don't see this dividend risk. So it's one or the other. Anyone else scrape financial data for personal portfolios? I used to. But I got someone to make some software to do that. Are you selling calls against your positions? Prince? Absolutely. What software are you using for your charting? Okay, Lily, that's Thinkorswim. Thinkorswim.com, and you can just download that. Good evening, Miss Sheila. AAP for next week. Cool beans. What is your average yearly return? Just drew over 50% per year. Macy's looking pretty good, as well as Walgreens. What do you think? Can you check and see? Yeah, Arrow, we already looked at Macy's. Walgreens, we will take a look at a little bit later. Is that written down? It's written down now. WBA. Okay, I actually have some Walgreens. Hey, Sheila, we're going to take a look at AAP, Advanced Auto Parts. Now, just to let you know, I do have some Advanced Auto Parts. A year ago, 70.94, bottomed out in October, 47.90, topped out at 88.56, and that was the end of March. From there, she just drops and drops. Okay, we got a signal in a couple weeks ago. Look at that nice movement. Okay, up, down, up, down, up, down, up, down, up, down. Very predictable. Down, and look where we are now. 1, 2, 3, 4 days. We have 3 days to the upside from a 30-day bottom. This is what I like to see. That's a good pick there, Sheila. Yeah, but then again, Sheila, it's cheating because you've been watching every morning. Anyway, yeah, that is a good pick. AAP. Okay, Drew, I answered your question. Tim, IEP. IEP. Isn't that usually no IEP? Icon Enterprises. Now, some people like what Mr. Icon has to say on what he has to do. Well, he does offer weekly options. Okay, look where his stock is, right down here at $15.91. Okay, the 16s are going for 40 cents. That's well over 2%. All right, but what is it that I don't like about this company? Well, let's go find out. IEP. Now I'm going to Yahoo Finance, and in Yahoo Finance, it gives me all the financial data on IEP. Any stock you can take a look at. Now this is one of the reasons. Let's take a gander at all of the dividends that the IEP offers. Okay, now it goes all the way back until 88. So 88 to 24 is not even close to 20 years. Right, 1988. Wait a minute, yes it is. Yeah, 88, 90, 98, 93. Oh, so it's over 30 years. Okay. Right, here's what, there's something I didn't like. 88 was 49 cents. 89, 49. 90, 49. 91, 49. Look at that. 92, they cut it in half to 24. And then in 93, they cut it in half again. And then in 05, okay, nothing in 94, nothing in 95, nothing in 96, 97, 98, 99, 2000, 2001, 2003, 2004. So go 10 years without paying dividends. And then they cut the dividends to 10 cents. So now in 2005, you're getting 10 cents dividends. Okay? 6, 7, 8, 9, then they're up to 24 cents by 2008. In 2009, 24, 2010, 24, 2011, then they cut down to 10. Then from 2012 to 2013 jumped up. Yeah, there's no consistency whatsoever in their dividends. And look at this. 2019 they started paying $2 a share. Okay? 2020, $2. 2021, $2. 2022, $2. 2023, $2. Didn't increase at all. And then 2023, they dropped down to $1. So they cut the dividends in half again. Do I have a Discord, Scott? Yes, I do. Okay, that's for the morning trading group. So yeah, this is only one reason why I don't like IEP. Let me show you the other reason why I don't like it. Oh, I guess that wasn't correct. How could that be right? They're paying $4 a share. Yeah, I see that. Okay. Well, I can see how that can blind you because he's paying 25% yield. That's a nice yield. But it's not what they have been paying out historically. Okay, because the stock price keeps dropping, the dividend keeps dropping. Okay, so how does that make sense? Let's go back a little further. Okay, so 5 years ago, the stock's at 74 bucks, and it slowly drops, and then 2020 is worth 54, and then 2023 is around 27, now it's at 15. But the dividend keeps going down, 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 and the stock price is going down, down, down. So what does that tell you? For me, it's a no, no, no. So, hey, Tim, if you like IEP, more power to you. But it just, the numbers just aren't there, and they're consistently losing. All right, here we go. Damon Ed been and ask Macy's. All right, the last traded was 1576. The bid 1570. The ask 1577. I'm not quite sure, Damon. What am I looking for there? I'm not sure what I'm looking at. Just Drew, look on the website. He shows 2 accounts. One's like 70%. Yep. Mommy Outlaw, do you buy the stock outright first and then sell a covered call? Mommy Outlaw, you are 100% correct. But make sure you buy a good quality stock, because a couple of rules. For me, there's a couple of rules. Rule number 1, never buy something you do not want to hold long term. So if you're going to buy it, go in as if you're going to buy it and hold it for a long period of time. Okay, if you get your 1% and you get out, you say, thank you very much, I'll see you again in 90 days and we'll play again. Because that's what happens. Take a look at Macy's. They pay a dividend every 90 days. So if I look at the stock every 90 days just before the dividend, I know it's going to jump up. Because every year it goes up just before the dividend. So why wouldn't I take advantage of that? Check the numbers yourself. Going on over to Yahoo Finance, okay? Go on down to historical data. And when you get to historical data, you can see all the dates. The dates, the open, the high, the low, the close, the adjusted, and the volume. How many shares traded every single day. And if you slide down, you will see, it'll pop up in a second, right there, see it? Dividend. Okay, dividend, the 17th of May. Okay, go 2 weeks before the dividend on the opening price. Remember, first row is opening, high, low, close, adjusted, volume. Okay, so 10 days prior, 2, 4, 6, 8, 10, 1041. Okay, at 1041, right here, and the dividend is $1. So I'm looking at 1841. Well, 2 days, it hits it. Okay, you take your dividend, you add it to the price at the beginning, 10 days prior to, and that's your exit price, 1841. Well, here's the high of the day. 1 day, no. 2 days, no. 3 days, yes. Yes, 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 yes. All over that $1 dividend. Well, stocks have a tendency to go up just before the dividend. So why not take advantage of it? Buy the stock before the dividend. Do a covered call, because the covered calls, the premiums are a lot better than the dividends. It's just a numbers game. If the dividends were higher, well, then I would do dividend capturing. But dividend capturing, it's not as profitable as the covered calls on the good quality stocks. So sorry, Tim, IEP is going to be a no. Mommy Outlaw. Yes, he does this. Okay, I know what they're talking about. Barney, Fang. What the heck is Fang? ENG. Diamondback Energy. Interesting. 197. I never heard of them. Now, usually, if I say I never heard of something, there's usually a reason why I've never heard of it. So let's check Fang and see how well they increased their dividends to see if they're even on our list. Well, that's going to be a no. They first started paying dividends in 2018. It's 13 to 19 to 38 to 40 to 305 to 83 to 84 to 197. Yeah, sorry, bud. It's just the dividends are too inconsistent. Alright, so Fang is going to be a no. What do I think about the Qs going to do tomorrow? Don't know, don't care. I don't do the Qs. The Qs are just not my thing. Okay? 448. Well, if you take a look, 30-day high was 3 weeks ago. 30-day bottom was Monday. Tuesday was an update. Wednesday was an update. Thursday's an update. Well, what do you think? Look how much further they got to go. Okay, 30-day bottom's right here. And that's a pretty big drop from a little over 500 down to 430. Okay, that's over $70. It's a big drop. Some people might say that, hey, that's a big drop, I'm going to jump in. Well, a lot of people did. And then the stock bounced. Does it have 1 or 2 more days to go to the upside? Could be. That's that's what it looks like. Let's take a look at the seasonality on the Qs. Well, take a look at that. Okay, far left is January 1st. Far right, December 31st. It has a tendency. See the red line? The red line represents 10 years of average movement. From January 1st to December 31st, it's almost nice. It almost looks like Apple and Dell. Okay, always nice, up, straight, and even. The blue line represents this year. What is it going to do in the next couple of weeks? Well, it looks like it's just going to go flat. Yeah, flat, just sideways. No big jumps, no big drops. But that's all historical data. You know, that's not it's not guaranteed. And just because he did it the last 10 years doesn't mean he's going to do it again. Okay, this could be, well, this is currently the new 30-day bottom, and that is 3 days to the upside. That just all depends on how you look at it. RG, thank you. Cash Dog, UPST. What the heck is UPST? UPST. Upstart. Never heard of them. So let's check out seasonality. UPST. See how quickly. Oh no! The answer is Ipswich Clams. That was Billy Crystal. No, there are no dividends to select a time frame. So if it no dividends, sorry there, Mike. Oh, Upstart, yeah, that's going to be a no for me anyway. If you like it, more power to you. You know, I'm happy for people if they make money, but if it doesn't fit my parameters, it's nothing but wasting our time. Great actor, yes, he was. He still is. I don't know if he's still acting or not. Maybe he is. IEP. Can you look at Run? RUN. RUN. Okay, Run. $18. And it's at a 30-day high. Now, I'm not even going to bother looking at the dividends about these because this is a no right off the top. It's at the high of a 30-day period, which basically means she's going to drop any day soon, hypothetically speaking, because when you get people down here buying at 11, if she jumps up to 18, that's a $7 increase. And $7 on $11 stock, that is about 60% maybe. That's a big jump. And if you go up more than 10%, yeah, you get people bailing all day long, taking profits. Mommy Outlaw, ask him to show you how he does the combo transaction. Yeah, somebody wanted the combo transaction. I'm going to do that in a minute, as soon as I find another good stock. Barry, we already looked at Fang. Fang is going to know. Imagine your stock guy pays you a 7 to 12% a year. Then he does this with your money and makes 50 plus. What the hell do you think they do in the first place? You think you take your money and put it into a bank that they just sit on it and just let it sit there? No, they're using it. IEP, we already looked at IEP. IEP is a no. And Barry, you want to take a look at Siri. SIRI. Well, let's take a gander at Siri. What's a Siri look like? Ooh, check that out. Remember we saw that big jump with Siri, then the big drop? And then we were waiting for it to drop again? Well, let's take a look. Siri, a year ago, 476. Topped up at 578 in the middle of December. Now from there, she just drops to the bottom of the year. And that was 245. Can you imagine that? 245? Uh-oh, I missed the question over here. FMGASX. Ooh, never heard of either one of those. Neil Hamburger. All right, so Siri, last 30 days. All right, here we go. 30 days ago, we opened up at 325, shot up 406, dropped to 322, and then we got a double high at 412 on the 25th. From the 25th, if the 30-day high drops down to here, your 30-day bottom, 3 days to the upside, what do you, I'm jumping in this bad boy tomorrow. Woohoo! Look at it. That is classic. Up, down, now she got 3 days to the upside. What do you think stocks do? They go down, they go up. Once we get a profit like this, look, it's 412 to 290. 412 to 290. That's almost a 60% drop. That's a big drop within 2 weeks. 60% drop in 2 weeks. Well, of course there's going to be accumulation at the bottom because you're going to have buyers saying, well, I like Siri, I just don't like it at 6. I'll like it at 290, but I won't like it at 6 or 5, whatever it is. That's a good pick there, Barry. I like that one. So at 316, the 3s are going for 14 cents, not worth it. The 350s are going for 3 cents. Barely getting your 1%. I mean, that is such a nice setup to get only 1%. Yeah, it makes me a little query. Robert John McKeon. What was that? I just missed it. Damn it! I read it and it disappeared on me. You probably answered this already, but I just arrived. Favorite dividend stock, Macy's. Can I look at Chevron? CVX. Here we go. Chevron. You're the next contestant. All right. First thing I want to see, always the high, the low. Where was it? Where is it? Where it's going? Ooh, what's going on here? I want to take a look at that. So our bottom's down here. XON. ExxonMobil. I'll write that down. Good one, write this down. All right, CVX, 144.95. The 145s are going for 185. See that? Bid, ask, high, low. I can buy it tomorrow morning. 144.95. The 145s are going for 185. That is well over 1%. That's a yes for me. Oil's going up, probably. But let's take a look at the chart, because I like to have odds and probabilities on my side. A year ago, we're at 158.54. Topped off back in end of September at 171.97. From there, she finds the bottom of the year in the middle of January. And that's the bottom in the middle of January at 139.55. Last 30 days, this is what we're looking at. This is like a perfect buy, almost a perfect buying opportunity. I missed that question. Give me a second. What are we looking at? Double bottoms. Yep. Oil going up. Yep. Hey, Akuna's here. Akuna, how's it going over there in Sweden today? I hope it's nice. It's lovely out here today. Double bottoms times 5. Yeah. Well, that does look like a pretty good bottom right there. Good evening there, sir. Okay, so our 30-day top for Chevron, 164.37. That was in the middle of July. Okay, that was a couple of weeks ago. Now, she has a 30-day bottom yesterday. So this is like a perfect opportunity for tomorrow or Monday. Because 30-day bottom here, 142.33, very next day, which is today, is an up day. So if Monday is another up day, that's 2 days to the upside. That's where I call an up day. From a 30-day bottom, 2 days to the upside, I jump in the next day, and Chevron may look perfect for Monday. As a matter of fact, I'm going to write Chevron for Monday. CVX with a little circle with a question mark, because it might be perfect opportunity. Drinking a hot toddy. Help my throat out. Okay, well, we did that one. RG, what do you think of Altria? Do you see it being a strong hold with low volatility, good dividend? Now, RG, when I read the sentence, I read between the lines, okay? When you say strong hold, you're thinking of buying it and holding it for a long time, because that's what it sounds like. That's definitely not what I do. I buy, grab my little profit, see you again in 90 days, because the stocks move up every 90 days just before the dividend. You can go back and look at historical data and look at historical charts, align it up where the dividend is, a couple of weeks before the dividend to the dividend date, and then after that, does the stock go up? Well, most of the time it does. So that's where I take a look. Take a look, jump in, take advantage of it, jump out. TikTok King, I couldn't tell you what the answer is to that question. What do you think about Altria? The dog woke up and barked today. Okay, Lily, I'm not 100% sure what that means, but okay. Oh boy. Let's take a look at Altria. All right, Altria is going to be a no for the next couple of weeks. All right, only reason being, take a look at where she's sitting. Okay, I'm not even going to look at the numbers because they're not worth looking at because it's going to be a definite no this week for me. But if you like it, that's up to you. Look what your 30-day high is, 51.40 something, whatever. And look where it is right now. It's too close to the high for my liking. There's going to be profit taking, and I don't want to be anywhere near a stock when there's profit taking in the near future. Okay, but don't get me wrong. I like Altria. It is on my list. It's just that the stars are not lining up. However you want to look at it, it's too high for me at the moment. Not the stock price. It's just too close to the high. I like to wait for it to come all the way down to a 30-day bottom because you're going to make the money in the stock market when you buy low and sell high to a place where it's already been. It's never been to 55. So why am I taking that chance? Now, when she drops down, let's go take a look at this. Okay. Now, look at that right there. Okay, she goes up, pulls back, up, pulls back. How would you like to be right there? Up, pull back, up, pull back. I want to be at the 30-day bottom, going to the upside after a 30-day top. Okay, so where is it right now? Well, right now, it's at a 30-day top. Look, she goes up, pulls back, shoots up, pulls back. Now she's up here again, the same exact spot. So what's going to happen? Normally, okay, a teeter-totter, seesaw, whatever you want to call it, goes up, it goes down, it goes up, it goes down. That's what these stocks do. And right now, she's at an up cycle. I want it to be down and want it to go off the bottom. I don't want to be playing around the top. All right. What other questions do we got? SCHD. I don't even know if I want to dignify that one. What do you think? Oh, we already did that one. What broker do I use? I use Think or Swim. This is my trading platform, and that goes through Charles Schwab. Okay. I also have a couple accounts at Robinhood. What do you think? Oh, okay, RG, we looked at Altria already. Have you talked about SoFi? SoFi's, no, they haven't been around long enough. What stock is that? Altria. For monthly dividend income, Urshan. In a rush, pressure washing. Okay, I'm not seeing the questions you had here. It would be nice if I could just click on your name and see all the questions you had, so that way I can have an idea of what you're talking about, because I can't quite see. PPG looks like a possibility. What about Solana? Now, Solana, I've never heard of. Okay, it's just going to send me down a rabbit hole where it's going to come up to an answer, which usually means no. We can always avoid that just by saying no now. PPG. But if you really want to look at Solana, you have to send me what the ticker is, and then we'll go from there. Other than that, I've never heard of it, and very seldom is actually something get by me. But I'm still early, thanks. ChartQuest. I don't know what you're early for. NVDY, MSTY is CONY. Did you know that Nordstrom started by Swedish immigrants and Walgreens started by the son of a Swedish immigrant? Okay, that's pretty cool. But no, I did not know that. Okay, so in a rush, you want to take a look at NVDY. That's going to be a no. MSTY, that's going to be a no. And CONY, that's going to be a no. Isn't that weird? They're all going to be no's. But let's take a quick gander, just so that he knows I'm not disregarding his request. But NVDY, monthly optional stock. No. MSTY, monthly optional stock. No. CONY. Oh, look at that. 3 no's in a row. No, no, no. Now, the reason why I'm saying in a rush, no, 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 because the numbers just don't work on monthly optional stock. Here's why. Because you can only write a covered call once a month, right? So that means I'm going to get a grand total of what? 12 to 24% per year? Okay, that might be fine, but then I have to guess where the stock's going to be in 4 weeks. Well, here it is now at 15. Okay, where does it look like it's going to be in 2 weeks? Well, I don't know, but I can tell you the next 4 or 5 days, she should be bouncing off this 30-day bottom, 3 days to the upside, probably by next week, probably around 17 or 18, somewhere around there. But 4 weeks? No, I can't do that. Okay, and if I'm wrong, not only am I not getting 1% per week, but I got to hold it for another 4 weeks, and again, not get 1% per week. So I like weekly optional stocks because, number one, there's plenty of them. There's over 300 that meet my criteria. Now, if I wanted to change my criteria a little bit, I could probably get a little bit more than 300, but 300 is more than enough. And I like the idea of 20 years of increased dividends. Well, that means the company is profitable. Why not? Why would you put your money in a company that's not profitable? Okay? It's beyond me. I can't even understand why people give their money to a computer. Tell the computer to invest for me. Here, I don't want to do it. You do it. Oh, I know you're not a person. You're just a computer. Well, you do it for me anyway. Can't do that. Broadcom's way out of my price range. Which option price do you pick? Well, Mommy Outlaw, I usually pick at the money or in the money. Now, hopefully you know the difference. Right now, the price is at $15.45. At the money will be right here, between the 15 and the 16. That's at the money. In the money is when it's lower, okay, like 14 or 13. Well, it's already at 13 or 14. Out of the money is 17, 18, 19. Means it hasn't hit it yet. So in the money, at the money, out of the money. I like buying it at the money or in the money. Okay, the less the stock has to do in my favor, the better off for me. So if I'm at the money, the stock can stay where it is and go up, and I get 2 out of 3. 2 out of 3. Because stocks only move 3 different ways. Up, nowhere, or down. So it goes up, doesn't move at all, or it goes down. So if I'm buying at the money, right, I have a higher probability to get money if the stock doesn't move or goes up. Okay, that's 2 out of 3. Now what happens if I buy in the money, like the 14, or sell the 14? So if the stock goes up, I'm good. Stock stays the same, I'm good. The stock can even come down a little bit, and I'm still good. So I get all 3. Okay, up, down, and sideways. Funds. Do you buy the stock the week before they pay the dividend? 2 weeks before the dividend. PPG. We already looked at PPG. Yeah, we already looked at it. Okay, here's right down here. Okay, 30-day high way up here, 30-day bottom right there, 119. 119 is going for 140. A very high probability of being right and being in the money. W. King, how are you today? Ooh, somebody wants to take a look at Valero. Fonz wants to look at Valero. Okay, S-Dub. Plus, the at-the-money options are basically 0.5 delta, coin flipping, even without. All right. Fonz wants to do Valero. Julian Vasquez. ¿Qué pasa, amigo? ¿Cómo está? ¿Está bien? Se magnifico. Okay, VLO. Valero Energy, 151.61. First thing I always want to see. The high, the low, where was it? Where is it? Where is it going? Okay, cool. I like all 3. Then jump on over to the numbers. William Lee, how are you today? Current price, $152.99. The 153s don't exist. 152.50s go for $289. Well, that's over 1%. I like that idea. All right. So take a gander. A year ago, 130, bottomed out in November at 119.88. Okay, shoots on up from 119.88 to 184. That's a $70 increase. All right. Well, from there, look at that movement: down, up, down, up, down, up, down, up, down, up, down, up, down, up. Wow! Take a look at those. Isn't that interesting? Interesting to the upside. Small recovery, big, small recovery, big, small recovery, big, small recovery. Interesting. Now, the question is, do I like this stock at this current moment in time? Look at where the position is. Okay? Down here, she went up, pulled back. Shot up, pulled back. Well, now she's going back to the upside. 1, 2, 3 days to the upside already this week. Great job, you've done 90 minutes. Don't forget to take a break. Well, my hot toddy's all gone. Didn't help very much. Well, it did kind of help. All right, let's go to the book and see what is next. Invite Sophia Martinez to join live. I have no idea who Sophia Martinez is. If I did, I would invite her. Next on my list is Visa. There we go. Visa, $260. High, low, was, is, direction, simple, right? Okay, so 260.89. The 260s are going for 310. That's not quite 1%, because the 260.89, and if you sell the 260s, you take 89 cents off of here. Well, you're at $2.30. Close to 1%, but not quite. What do you figure out what you want to buy for Monday? Dude, today's Thursday. I don't think about Monday until Sunday. Sorry. So here we are with Visa. Okay, just barely getting you 1%. A year ago we're at 240. Got a triple bottom at 228. Shoots on up. Gets a nice little high at the end of March at 290.71. Julie, how are you today? Nice to see you. Okay, from 290.71, she drops, pulls back, drop. Look at the class. What nice movement. Clean. Okay, Hakuna, James, I know you like Walgreens, but is Nordstrom's also good for covered calls? We'll take a look at Nordstrom's in a minute. Nordstrom's. Oh, what is Nordstrom? JPN? Is that right? Is that right, JPN? No. JWN. I was close. Alright, so anyway, here's Visa. Last 30 days. Okay, down, up, down, up, down, up. Yeah, awesome. Do you see that? Down, up, down, up, down, up. Yeah, that's nice movement. And you're just getting 1%. Thank you, Julie, Trip, Jen. What's my thoughts on ETC? Well, let's type ETC. We'll write it up in here. ETC. Alright. So, Visa, at this moment in time, the 260 is barely getting you 1%. What does it normally do this time of year? For that, we're going to look at the seasonality. And here we go. Take a look at that in the next couple of weeks. Flat as a pancake. That's flatlining. Alright, so that is Visa, if you like Visa. So that's always a very important question. Do I like Visa? And do I like Visa at this price? Because remember, going in buying, always buy something that you want to hold long term. Now, long term might mean something different to you than it does to me. Long term is like 1 quarter, which is 90 days, 3 months. Ugh. I don't like holding something that long. Longest I've ever held anything was 9 months. Now I got people here that say, well, yeah, I bought this stock 20 years ago. What? 20 years ago? Can you imagine the amount of money you're losing by just letting it sit there? Anyway, what do I know? Don't listen to anything I say. Do your own research. It's so much easier. All right, what's my thoughts on ETC? Well, let's take a gander at ETC. ETC. No options, that's going to be a no. Imagine that. That was quick. Chamkas, AbbVie, ABBV, AbbVie. AbbVie's a dividend king. Sorry, AbbVie's going to be a no this week. Don't get me wrong, I like AbbVie, but look where the stock price is. Okay, this would be good in 2 weeks. So I'm going to write AbbVie. We'll look at it again in 2 weeks. ABBV. Because the reason why I want to look at it in 2 weeks is I like AbbVie. You know, they're a dividend king. They've increased their dividends for over 50 years. That's 5 decades. So she's at a 30-day high now, 180. The 190s, 194, ooh, barely 1%. Well, that works for me. I like those numbers. Like, why not? That hot? It's hot. Yuck. So, that being said, do I like that? Well, I like it, but I want to see it in a couple of weeks after she drops from the high. Because 30 days ago, okay, 166. Well, now she's at 190. So 166 to 190, that's 36. Is that right? 66 to 190 is $34. So $34 is 20%. That's a 20% increase. Okay, anything over 10%, you're going to see profit. That'd be me. Anything over 10%, I'm taking profits. That's it. You've got to decide where's your bottom. Because when you're trying to pick a bottom, you got to figure out where that is. Me, it's 2 days to the upside from a 30-day bottom. Okay, anytime she hits the absolute low, and then after 2 days after that to the upside, well, that to me is indication she's turning around and going back up. Okay, same thing when it comes to tops. Where am I going to call the top? Okay, because it's your interpretation and it's my interpretation. There is no real right or wrong answer until it comes definitive. What is your favorite stock at the moment? That'd be Macy's. Yeah, it's at 190, and then the EMA 200 sits at 163. It is trading out of its brains right now. Okay, 60 RSI. Okay, honestly, that doesn't mean anything to me. To me, the way I'm looking at it, it is too close to the 30-day high. Not enough profit taking. Okay, so it goes from 166 and shoots up to 190, 194. Well, yeah, somebody like me is going to say, ooh, I like that profit. I will take it. And then I will take a look at this again in 2 or 3 weeks after all the profit taking is done and the stock price drops. I am Fatima of the Seven Veils, the swingest #1 dancer in the Sultan's whole harem. Okay, could you please explain when to buy in Robinhood or Forex? Fatima, I'm not 100% sure what you're talking about there. I don't do Robinhood. Now, I trade on Robinhood, okay, the app. I don't trade the stock Robinhood, which is HOOD. I don't do that. Oh, thank you for that. I'm not quite sure what you mean by that question. Could you please explain when to buy in Robinhood or Forex? Now, I'm not 100% sure what you mean by that question, because I look for certain things. All right. Now, this trading strategy was created for a 9-year-old. It was really simple. Okay. The main object of the trading strategy is to be simple, safe, predictable, and consistent. Okay, with no ways of losing. That's the criteria I had to overcome. So if you take all your dividend stocks and put it to the calendar, well, you know what you're looking at. Okay, so you know what to look at this week. Great. So what am I looking for? Well, I'm looking for the numbers. What are the numbers telling me? Well, before I go to the numbers, I see where the high is, I see where the low is, and I want to see what direction it is going. Because it's the momentum that you and I create. We are the buyers, we are the sellers. We create this mess. We say it's too high, we say it's too low. Okay, so if it's too low, we start buying. If it's too high, we start selling. That's the way we do. Now, there are some innocent bystanders that want to jump in once in a while, dip their toe in, but don't want to play in the water full time. Okay, so it's basically a game. So if I'm here looking at certain stocks every single week because I want a safe, predictable, consistent 1% per week, okay, I'll look at the same stocks over and over again because they make the same consistent moves over and over again. And they consistently pay very nicely over and over again. Okay, so if I'm looking at Macy's and she's up at 20 or 21, 22, well, I know it's not time for me to buy because I've been following it every week, sometimes twice a day. Okay, but when she comes down and she's at 14, 15, 12, 11, 13, well, then I know, yeah, that's the time to jump in. Because right here, don't get me wrong, AbbVie's a wonderful company, but she's too close to the high for me. Okay, eventually it will come down. If you just take a look at the chart, okay, look at that. Okay, she went up, she went down, she went up, she went down. Now she's down here, now she went back up again. Okay, you go back a little further, you take a look at 30-day time frames. Well, look, here you go. She went up, she went down, she went up, now she's coming back down again. Okay, you look at what makes sense to you. Okay, right now, this is where we are. She's down, she went up, a little bit of pullback, now she went back up again. Well, now she's going to come back down again because she's too damn high. Okay, now they haven't come up with any new products, they haven't come up with anything new, jingles, or any way to increase their value. So it goes up, then it comes down. It goes up, and then it comes down. Alright, so let's move on. Can you please explain? Okay, I can't do that one. My average price share is 108. I have no idea what Camus is talking about. Alright. Camus, what are you talking about? My favorite stock at the moment. Okay. Hey, Hassan Pfeffer's here. Cool beans. Icon Enterprise last quarter widens, revenue declines. Okay, well, Icon's still off my list. They've been losing money consistently. What about $? I sure hope you're not talking about Realty. That's a hell no. I mean, to buy actions. All right, Fatima, you know what? I offer this to everybody. You really want to have a conversation that directly and answers your question. Send me your number. I will give you a call. James, do anything when your stock splits dividend is adjusted? Yes, I'm aware of that. But even so, by looking at the 30-day chart, looking where the 30-day bottom is, looking where the 30-day top is, gives me an idea of what we, the buyers and sellers, are thinking. Because we're all thinking the same thing. We all want to buy a stock. We all want to make money, but we all look at it differently. The way I look at it, if I get 5 or 10 or 15 or 20% profit in either direction, I'm jumping in or I'm jumping out. Because I find this to be a fun little game. Stocks go up, great, I'll take my profits. Stocks go down, I start buying them cheap. What's wrong with that? You make your money when you buy low, sell high. You can't do that with AbbVie this week. You got to wait for it to turn around, go back down, and play around the 30-day bottom again. Okay, then you get to do the same thing all over again. But Fatima, yeah, if you want to DM me your number, I'll give you a call. We can sit and chat, and I can walk you through whatever you're having a difficult time with. Andrew Smith, Kohl's and Bank of America. We're going to take a look at that as soon as we look at JWN, Nordstrom's. Now, I made a lot of money off of Nordstrom's earlier during the year. JWN, not time to buy. First thing, always, high, low, was, is, where it's going. Lovely. Let's move on. Okay, from there, 22.53. The 22.50s are going for 40 cents. That's smidge shy less than 2%. If you're looking for your 1%, well, you're going to get that plus. Okay? Now, what's the chart telling me? Well, a year ago, she's at 22.27. Imagine that, because right now she's at 22.53. Not much has changed. Well, kind of, but anyway, bottoms out in the year at 12.95. That's a big drop, almost 45 cents. Okay, shoots on up to 24, almost doubles in price. Well, there's your profit taken right there. Last 30 days, here you go. Shoots up, pulls back, shoots up, pulls back. What do you think is next? Okay, up, down, up, down, up, of course. Up, down, up, down, up. That's what it looks like. Okay, now what does it normally do this time of year? For that, we jump over to the seasonality. Seasonality looks a little bit like this. That line is just about going sideways, isn't it? Well, not a whole bunch. A little spike here, a little spike there, not much. But that's what she normally does this time of year. No big moves in Nordstrom's. So if somebody wants to take a look at Kohl's and Bank of America. Now, I think we already looked at Kohl's today, didn't we? KSS. Oh, look at that. Doesn't that look sweet? Up, down, up. Right there. Up, down, up. Going to the upside. Right now she's sitting at 20.03. How soon do you write the call after buying the stock? Mostly buyer rights. Yep. I do it the exact same moment. Oh! Perfect opportunity. Let's do it. You guys wanted to see a one-click covered call. That's when you buy the stock and sell the option at the same time. Let's do it on Nordstrom's. On Kohl's. Kohl's looks rather interesting, and I actually have some Kohl's. All right. So I like the $20 call. Okay. So let's take a look at the $20 call and see what kind of a profit it is. We'll take a look at the 20, and then we'll take a look at the 20.50. See which one's better. Okay. So let's get rid of this. I want to change the spread from single to covered stock. Okay. The current price is the 20 that I'm looking at. I hit the buy right there. Automatically fills. Buying 1,000 shares, selling 10 contracts. It's 100 to 1. So it's 100 shares for every one contract. 1,000 shares, 10 contracts. So let's take a look at the numbers. Okay, the percentages will still be the same. So if you get 100 shares, 200 shares, so on and so forth, it's always the same. Okay, I'm buying 1,000 shares of Kohl's. I am selling 10 contracts of Kohl's 20, 16 August 24. That's next Friday. Well, no sense doing tomorrow's because there's no money in tomorrow's. Okay, so I'm going to hit confirm and send. Then the order itself pops up. Well, let's take a look at the order. Here it is right here. Buy 10 covered Kohl's, KSS 100s. Those are the weeklies. 16 August 24. That's next Friday's date. That's when the option expires. The $20 call and buying Kohl's at this price to open to open. No, it says to open to open. You're opening 2 orders. It's a covered call order, but you're doing 2 orders. First, you're buying the stock. That's to open number 1. To open number 2 is you're selling a covered call. You're selling a stock option against the shares that you currently just bought. You can do it instantaneously. And that money right here in this instance is 530. Do you ever write naked put? Nope. Nope, never do it. He wanted to know if I write naked calls and puts. Okay, that's a little bit, that's like level 5. I'm approved for level 5, but I don't do it. Because I've been trading long enough, they gave me that approval. Alright, so maximum profit. Remember I told you I like safe, predictable, consistent? Well, it's telling me exactly what I'm going to make off of this trade before I even do it. That's predictable. And if I do it over and over again, well, that's consistent. Safe is I've been doing it for a while, so I know what I'm looking at and I know what I'm doing. Alright, so that being said, buying 10 covered calls, Kohl's, 16 August, blah, blah, blah. Okay, my break even, the very next line down is my break even, 1947. Well, the stock is currently at 2040. Well, then I think it's a relatively safe bet. Because if stock goes up, I make money. Stock stays the same, I make money. The stock can even come down to 1947. That's break even. I'm not losing, I'm not making. But 1947 is break even. Okay, great. Profit is 530. Let's get my calculator. clear this out of there. 530. And I'm going to divide it by the purchase price. What does it cost me? Do you have a percentage of position size, metrics, blah, blah, blah? Okay. Yeah. Okay. If I have four positions in one account, it's 25%, 25%, 25%, 25%. If it's 5 positions, it's 20, 20, 20, 20, 20. Okay, 6 positions, it's 1750, 1750, whatever, something like that. I like to keep them all even. It's possible. Doesn't always work that way, but I like to try to keep them all even. All right, so right here it tells me my profit's going to be $530. What is it going to cost me? Well, it's going to cost me $19,475. $19,476, and that'll give me a great return of 2.7%. 2.7%, and it's already in the money. The stock doesn't have to do absolutely, it doesn't have to go up. It can stay exactly where it is, and I'm still making 2.72% for the week. Do you think realty income is good? No, I don't. Do I think realty income is good? No, I don't. Not for me. It might be good for you, but it doesn't work for me. Okay? Now, I will write it down. We will take a look, and I'll explain to you exactly why it doesn't work for me. Okay? When I say I have certain criteria that I like, well, realty just doesn't meet it. Okay, so that is this one at Kohl's at the current price. All right, the current price is $20.40. The call strike would be the 20, which would give me 2.7%. I'm perfectly happy with that. Ooh. All right. Bank of America, huh? BAC. Company's over 100 years old. One of the issues with companies that old, they have a tendency to be stuck in their ways. You pay $330 for an option that it needs to expire $330 in the money. Yeah, Dub, I know that, but I don't buy options. I sell options. There's a huge difference. And you're right. If I'm buying it, it has to. Was answering a question. So you weren't even talking to me. Alrighty. Trading with Rusty Rod. Good evening for your viewer. Thanks, ESW. Alrighty then. One thing less I have to do. Alright, so Bank of America, $38.34. Okay, well the 38s are going for 81 cents. How do you determine which strike price to sell? Ooh. Well, see now, you would think that's a good question, but it's kind of awkward because if the stock is $38.34, well, what is the closest strike price? Well, the closest strike price is going to be the $38.50. In this case, the $38.50 is going for 53 cents. See it? And that is well over 1%, because 1% of $38 is 38 cents. All right? Now, you can always take a look at the 38. Okay, 38.34, the closest one is going to be 38.50, but the stock does have to move up. But the 38 is in the money, and that's paying 81 cents. But you're losing 34 right off the front. Okay? See, if I buy it at 38.34, sell it at 38, I'm losing 34 cents. So you take 34 cents off of your profit at 81. And that brings you down to 38, 50, 40 something. 41? Yeah. It brings you to 41 cents. And 41 cents is still over 1%. So you have a choice. The 38 is going to pay over 1%. And the 38.50 is going to pay a little bit more than 1%. So that's a tough question. For me, I do the 38 because the stock doesn't have to do anything. The 38.50 stock does have to move up a little bit. Okay? So if the stock doesn't move at all, you miss your target. Okay? If the stock is higher, well, you meet your target. You only get one at the moment. But in the money, you get all three. Ugh, I hate those things. Ugh. Alright, where do you buy at for Macy's? I'm not 100% sure what you mean by that. So a little give back is okay since the stock doesn't have to move. Makes sense. Freaking awesome, dude. Right on the money. So if you buy the stock and you sell it in the money call, in the money, which is the one I just pointed out, the stock doesn't have to move at all, and you're still making your 1%. So you got to stop thinking of annual percentages. You got to stop thinking of, does the stock move up? Well, there are a lot of math equations here. Okay, if I want to buy the stock and I want to make a safe, predictable 1% per week, well, there's a little bit of give and take. Okay, at this price right now, the 15.77. Okay, I would be looking at the 16s, and the 16s are going for 37 cents. Right? Then, if the stock would have to go above 16 for me to be back into cash. Okay, that way I get the premium, which is over 1%. And I get the difference between the 15.77 and the 16. I make a little bit more. I make, 23 extra cents per share. But if I do the 15.50s, well, I just take 22 cents off of that, and then I'm at 20 cents. Well, 20 cents on a $15 stock is over 1%. It's a safer bet because the stock doesn't have to move at all. Even if the stock goes backwards a little bit, I'm still back into cash, and that's the idea, to rotate that cash from one company to another, from one company to another. Because coming into the dividend, once that dividend is paid, the stock has a tendency to go down and just trade flat or whatever it should normally does at that time of year. That makes sense? So, Lily, wherever you say where do you buy Macy's, it would depend on, well, number one, I don't really understand what you're asking, but from what it says, where do I buy it? Well, if I hit the button here where it says ask, it automatically goes to Charles Schwab, and Charles Schwab will buy it for me if there's money in my account. That's the simplest and easiest way I can figure out how to say it. Because if you have your account at Robinhood, well, you'd go to Robinhood, you'd buy it there. I have my account here at Charles Schwab, so I would buy it here. I don't know if that's correctly what you were thinking. What program are you using to look at the stock? Right, Levi, it's not really a program. It is a platform, a stock platform where you trade. You put your stock symbols in. The numbers come up, buy, sell, how many shares, blah, 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 all that kind of nice, neat stuff. But it has all these extra perks. You know, it has the charts. It's got the option chains. It's got the calendars. It's got a lot of nice, neat, fun stuff. That's why I like this trading platform. I meant what call option? Okay, now, hypothetically, Lily, if currently the stock is at 15.77, right, and I buy it at the market at the open, 15.77, more than likely I would sell the 15.50s, which would be 42 cents I would bring in, which is over 1%. Okay, so that's the option I would sell. The 15.50 call option strike for 16 August 24, which is next Friday. Hopefully I answered the question. I got 30 more questions to go. For AbbVie, my average is 108 per share. AbbVie, ABBV. Okay, I got a silly question for you, dude. Chamex? Is that Chamex? I don't know. If you bought AbbVie at 108 per share, so the question would be, well, where's your exit strategy? Okay, are you just going to hold it forever, or are you just going? What are you waiting for? I can't answer because it doesn't sound like a question. It sounds more like a statement. Okay, you bought it at 108. Okay, you bought it at 108. Well, now what do you do? Because I don't know if anyone ever told you this, but it's kind of elementary. You know, I could have my 4-year-old grandson tell you this. It ain't a profit until you take it. Just because you bought it at 108, well, at 140 you made a nice profit. Okay, but 140, is the low of this year. Okay, right now she's at 190. That's an even better profit. So here's your risk. You risk missing possibly the highest it's ever going to get. That's a possible risk, because it could be a high of its lifetime and never ever 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 reach that price again. Or it can continue to go up, and if you get out now, you can say, oh well, I missed all that. It's a 50-50 shot, dude, but it's not a profit until you take it. Okay, so if you can afford to hold on to it and that's what you want to do, more power to you. Me, I'm not in that position. I don't have that luxury that you have. I can't buy a stock and just let it sit around and collect dust and collect, value. It goes up. But what does it do? It goes up, it comes down, it goes up, it comes down, it goes up, it comes down, it goes up, it comes down. That's all it does. So hypothetically speaking, you sell it when it comes back down again after the profit taking, because your previous bottom here, 155 or even the 165, well now it's at 190. It's not a profit until you take it. And people like me, we see it go up, yep, I'm taking that profit. I have no idea what you're going to do, but it ain't a profit until you take it, dude. Oh, I hate that. Ugh. PM Philip Morris. Not often do we take a look at Philip Morris. That's going to be a no. I should say. It's going to be a not this week. Sorry. Too close to the high. And hopefully that's a simple explanation. Okay? Now don't get me wrong. Philip Morris is on my list, but not for this week. As a matter of fact, let's put it down for 2 weeks out. Because once that profit starts being taken, she should bounce off. So when she bounces off, I want to be ready for it. Look, 30 days ago you're at 102. Now she's at 118. That's a $16 increase. $16 on a $100 stock. Well, that's 16%. It's a numbers game. You take a look at it. If stock goes up, you either take the profit or you let it ride. All right. There's a lot of people out there like me that saying, "Hey, it got up. I'm taking my profit and going to look at something else." Because I jump from one company to another. I am not monogamous at all when it comes to buying stocks. You go up, I'll take the profit. Thank you very much. I'll see you again in 90 days. Because Philip Morris pays a dividend every 90 days. Alright, Chamcus, do you think old realty is good? Oh my goodness, no I don't. Does break even mean you hold the stock longer? Well, that's what break even means. But why would you do that? Why would you buy something and sell it for the exact same price? Just break even. Okay, I'm looking for a 1% increase. I'm looking to collect a dividend. So if I was going to buy this at 116, the 116 is going for 145. Well, that would be more than 1% of the purchase price. Now wait a minute, would it? No, 117. The 117 is going for $1, not 1%. So that would be no, because the number doesn't work. Kevin, oh boy, is JEPQ dividends and yield too good to be true? Kevin, I'm going to say yes, it is. Let me tell you why. JEPQ. Number one. It is a monthly optionable stock, which means if I can only do it once per month. That's only 12 times per year. The max I'm going to get out of this company is 24%, if I'm lucky. Okay, monthly means once a month. Okay, 12 times a year. Me, I like weeklies, that way I get 52 times a year. But I'm not done yet. Let's go over to Yahoo Finance and take a quick look at JEPQ. JEPQ. Okay, historical performance. Look at all the dividends that they've paid out. Oh, wait a minute. Am I reading that right, Kevin? They've only started paying dividends in 2022? That's only 4 years. Wait, that's only 2 years. That's even worse. So JEPQ has been paying dividends for 2 years, and you're getting blinded by a shiny object. Let's take a look. 2 years ago, June 22, it was 38 cents. Went to 42, it's at 43. So the dividend is right about where it should be. 38, now it's at 43. Okay, fine. But it gets worse. Hold that thought. Now, the yield for JEPQ is 9.16. Now, I don't know how long you've been here, Kevin, but I'm here every single night from 9 p.m. to 11:30 p.m., showing people a safe, predictable, consistent way to get 1% per week. JEPQ has only been paying out dividends for 2 years, okay, and they're only offering 9%. So the question is 50% better than 9%, including the time and effort you have to put into it? So let's say, hypothetically speaking, you have a couple of $100,000. Well, let's just say 100,000. 1% of 100,000 is $1,000, or $50,000, or $50,000 a year. Thoughts on ADM? Well, let me write ADM down. ADM. All right, we'll take a look at that in a minute. But let's finish up with JEPQ first. I forget where I was. Imagine that. It's horrible. Alright, EDUP. You pay $3.30 for an option when it needs to expire? Yeah. Okay, I think we already discussed that one. Was answering a question. Okay, there you go. Good evening, Toyota Rusty Rob, for your viewer. Thanks. PM Long, got it. When trying to get out of a position that's gone down, do you try to sell at above your average trade price, or your break-even price? Andrew, that's a good question. Let me give you an example, because I always find that examples help a little bit better. Let's take a look at AEO. AEO is American Eagle Outfitters. Now, I originally bought AEO. What was it? April 1st at $25.97. Okay, so April 1st, $25.97. That's way up here, $25.97. Way up here. How did I end up buying it way up there? I don't really remember, but it is what it is. It was back in April. And in April. Okay, so back in April, this is what I was looking at. What the hell was I thinking? Yeah. All right. So honestly, I'd have to go back and take a look at what do you call it? I have to go back and take a look at my podcasts and my video, because I actually have videos from long ago, and I actually log all my videos live. I'm trying to get out of this. Okay. So anyway, I jumped into AEO at right around 26. So what's happened since then? April 1st. Okay, so since I bought it, this is what it's done. Okay, drop, drop, drop. Now, when it got down to here, I believe, I dollar cost average down. Okay, so I was originally at 26, and then I bought down here at 20, so now I'm at 23 is my average price. Makes it a little easier to get rid of. Not everybody has the opportunity to do dollar cost averaging. That's where you buy it at one price. Okay, my original price was 26. $25.97, way up here, okay, and then my second price was way down here, so it brings me right here to 23. Makes it easy for me to get rid of. So I bought it back in April, and as she's dropping, okay, I am lowering the covered call that I sell against it. So I'm at 26. I'm selling off the 24s. I'm selling off the 23s. I'm selling off the 22s. So if you see where it is right now it's at $20.83. Okay. Now I sold off the 2150s for this week, I believe. Or I sold off the 21s this week. So look at where it is right now. It's at 2080. I sold the 21s, which are right here. So I have to keep my eye on that, right? And I might have to roll it forward next week and maybe not bring in something. But every week I bring in over 1%, okay? Because when I lower my strike price, see, there's no point in me selling up here at 26 because it's not even close. I can't even see the 26. It's 22.50 right there. It's as high as it goes. 26 is so far out. So when I buy it down here, my dollar cost average, it lowered my price, so it's easy for me to get rid of and get higher premiums now. All right, I'm not quite sure if that makes any sense, but I bought it since April 1st. Now I like to be in on a Monday and be out on a Friday. So now I'm on week number 13, 14, 15, 16. Week number 16 with AEO. Do I want to hold it for 16 weeks? Hell no. But it is what it is. Never buy something you don't want to own long term. I have no problem whatsoever owning AEO. Every week I sell a covered call against it. Granted, I get my 1% every week, but the value drops. Okay? Now, even though the values drop, if I never sell, okay, I like rule 1, never buy something you don't want to hold long term. Never sell at a loss. Well, if I never sell at a loss and I'm still bringing in 1% every week, I got no problem with that. Even though the difference between my purchase price and the actual current value is less. As long as I'm continuously bringing in the 1%, I really honestly don't care because I'm not going to get rid of AEO at a loss. And I will wait for eventually it will go back up over 26 again at some point in time. Until then, I just hold it and I keep writing covered calls against it. Okay? Hopefully that makes sense. James, what stocks besides Chevron are we keeping an eye on for Friday and Monday? Whoa, now that is an interesting question. For that, ooh, look at this. SJ wants to look at Clorox. I'll write Clorox down. CLX. Now, for that, we look at my trusty book. Now, if you guys have known, I write all the stuff down, and you guys have me look at stocks all the time. Let's say last week. Okay, this is last week's stock list. You guys have me look at those. Okay, the week before, the week before. Yeah, I got all these pages, all full of stocks that you guys have me look at. So, if anything looks interesting or good, I write in the top right corner. So we have Macy's, Energy Transfer, AIG, Wells Fargo, Pepsi, ExxonMobil, Clorox, Target, Apple, Bank of America, JP Morgan, Wells Fargo, so on and so forth. There's a whole bunch of them. That's why you guys keep coming back. You keep coming back, you get to see what we're looking at. You get to see what's moving. You get a pad of paper, and if I say, oh, great, that was going to look good in 2 or 3 weeks, well, 2 or 3 weeks from now, we're going to take a look at it again and see exactly what it's doing. So as long as you get a good quality stock, one that consistently increases its dividends and has weekly options, and then you follow it consistently, you'll get to see patterns. You'll get to see where the 30-day high is. You'll get to see where the 30-day low is. And if you have money available, you can take advantage of the 30-day low. Buy it, and then as it goes up, sell it, take your profit, and move on to one of your other stocks. It becomes like a game. Okay, James, that answered your question. There you go. But in the money will take a little loss that causes a wash sale. No, not necessarily, William. Okay, let me give you an example right here at AEO. At the money. Okay, right now, 21.23 is the current stock price. If I buy it at 21.23, I can sell the 21s at 53. Okay, means I'm walking away with 30 cents a share, which is more than 1%. Right? If I go to the 2050s, I get 81 cents, but I'm losing 73 right off the top. Take 73 off of this. 73, then it's not worth it. This 2050 is not worth it. ADM, though, is 3A off low. Cool, we'll take a look at that. But it always comes down to the numbers. If I'm buying at that price, selling at this price, well, what am I walking away with? And is it the right time to buy? Okay, see, 30-day highs right there, 30-day bottom, now she's going to the upside. Can I make my 1% at this current position right now? Well, yeah, I can. How do you write covered calls? Bobby Z, how are you? You're relatively new here. Nothing wrong with that at all. How do you do a covered call? Well, it's relatively simple. There's two ways of doing it. One, you can buy the stock first, okay, then sell somebody the covered call or the call stock option at the same price. If I'm buying it at 21.23, I want to sell the 21.50s, which is going for 32, which is more than 1%. Or I can do the 21s, which is going for 53, which is more than 1%. Okay? So buy it, sell it. And if you don't know how to do it, there's a bunch of videos on YouTube that will walk you through it. Or you could just call your stockbroker and say, hey, can you walk me through a covered call? And then pick a good stock, such as Macy's, AEO, Nordstrom, Kohl's, whatever. Okay? So once you find a good stock, you got to buy 100 shares of stock to be able to sell one covered call. Okay? 200 shares, 2 covered calls. 300 shares, 3 covered calls. Okay? So, I like covered calls. They're simple, safe, easy. One of the safest trading strategies there are. And a Roth IRA, yes, you can. Jerry Beard, 25. My mom says I'm handsome, so yeah, I think so. Oh boy. I'm just holding for the tips. Okay, hold on. I'm missing some of these questions. Alright, here we go. I've seen some of these look familiar. Alright. A Roth IRA. Lily, no, I meant what price point for the covered call option is Macy's on the list for next week? Well, that's an interesting question, Lily. I already own Macy's. Okay, so let me see where I own Macy's at. Okay. Okay, so currently I own Macy's at $17.80. Okay. So I own Macy's at $17.80. And I sold the $15.50 call. Really? Holy cow. That's funny. Okay, so I'm into it at $17.80 and I sold the $15.50. See that? $17.80s. Alright. I originally bought it at $19.50. Dollar cost average down $17.50, and then again at $16.20. So my actual cost is now $17.49. But this week she dropped, and on Monday I sold the $15.50s, which is right about here, which is in the money, which means I have to buy it back now. It happens. Okay, I sold it at 42. Currently out, it's worth 49. So I'm losing 7 cents per share. Well, it all depends on what she opens up at tomorrow. Now, first thing in the morning, yep, I usually don't jump in first thing in the morning Friday, but in this case, I'm going to. Right, just to find out what's happening. James, how much is Dell paying tomorrow 92 calls? Really? Why would you want to do tomorrow's 92 calls? Tomorrow's Dell 92 call. Holy cow. Is that right? 90 cents? Could that be right? See, right here, Dell is at 91.46. Okay, great. The 92 calls are going for 90 cents. Alright. I didn't even think about doing the 93. Okay, yeah, interesting. That's close to 1% for one day. That's if you buy it in the morning. Now, of course, when the market opens up in the morning, all these numbers are going to change. So before you do anything in the morning, you know, check in at 9:30 a.m. and see exactly what it opens up at. TikToky. James, how much is Dell paying tomorrow? Yeah, that was a good one. Chemex. I will be joining your Patreon later tonight. Cool beans. Well, I will see you tomorrow afternoon. Now remember, we jump in at usually 9 a.m. every day, except on Fridays, because I don't do very much trading on a Friday, because Friday afternoon at 4 o'clock, 4 o'clock the market closes. All options for this week expire, okay, at 4 o'clock. Can't do anything after that. Lily, yes, that answered the question. Oh, I'm terribly sorry, Lily. Okay. It's very challenging trying to carry on, 15, 20 different conversations. Because you got to remember, I got Facebook over here, Instagram here, TikTok there, YouTube here, and another YouTube channel there. Okay, so I got all these questions coming from different angles, and then you say something, and it only gives you like 2 or 3 lines to say something, and then you didn't get the whole thought out. So then I get like 5 more questions go after that, and then the other half of your question comes in. James, reminder. Uh-oh, Hakun is going to remind me of something. Chairmarks, that's kind of silly. That's kind of silly. I'm just holding for the dividend. Ooh, interesting. Okay, E-dubs. You can always sell it, wait for it to pull back, and buy again when it hits a new low. Absolutely correct. But what is my profit and loss? Okay, do I want to take a loss? Or do I want to just buy it back and then keep from getting that loss? I don't know. But that comes down to the numbers. So you're kind of right about that. Is your desire to get called away, get back into cash? That's my desire. Also, do you hold to capture the dividend in 2 weeks? No, I would prefer just to collect the premium, because more times than not, the premium is higher than the dividend. And once you collect the dividend, stocks have a tendency to go down after the dividend is paid. So why would I want to bring myself into that time frame? How did you learn when you first started? Oh my goodness, back tees. It was trial and error, profit and loss. Okay, there are sometimes I've lost more in one day than most people make in a week. I've lost more in 1 week than most people make in a year. Okay, I also made more in 1 day than most people make in a month. It is a balance. All right, Jerry. Yeah, it is a bit, but pretty young. So I'm trying to get the snowball effect going. Cool beans, that works. Lily, so what does max loss unlimited mean on that M comic call? Oh, let's open that up again. Okay, now my assumption, correct me if I'm wrong, Miss Lily, this is the number you're talking about right here. Okay, maximum loss, 15,640. Okay, so here's the reasoning for that. Okay, legally they are required to tell you both the good and the bad. Okay, the maximum profit you can make off of this trade is $360, right there. Now, let's say, hypothetically speaking, you buy the stock first thing tomorrow morning, okay? Buy 1,000 shares, 100 shares, 500 shares, whatever. Okay, you buy it first thing tomorrow morning. A meteor shower comes down, wipes out the company. All of a sudden, the company's gone. There's your risk. Can it happen? Yes. Would it? Doubtful. But legally, they got to tell you. If this is my profit, this is how much I'm putting up front, 15,646. Well, that's what your risk is. Okay, which means if the world blew up and took Macy's with it, that's how much you're going to lose. Okay, the way I look at it, well, if I buy Macy's tomorrow, Macy's has been in business for over 100 years. What are the chances of them going bankrupt, disappearing overnight? Well, slim to none. Okay, but there's always that chance. There could be an earthquake that opens up the earth and swallows the Macy's Corporation down in every single store that goes along with it. It's possible. Okay, if you read some of the government reports where a bullet can stop in midair, turn 90 degrees, move over 3 feet, turn 90 degrees again, wait 10 seconds, and then proceed forward. If you believe that bullshit, then you can believe Macy's can go under in a day. And if you don't know what the magic bullet is, that's the one supposedly killed Kennedy. Okay? The magic bullet. It goes forward, turns, stops, then goes forward. Goes down and forward. Yeah, I saw that crap. I don't believe a word the government says. Anyway, I probably shouldn't say that with all these people listening. Okay, hopefully that answers your question. So unlimited. So anytime you buy anything, you could buy a tube of toothpaste. The factory could blow up, and all of a sudden that tube of toothpaste could be worth a lot of money, or then it could be worth nothing. It's all subjective. And if you honestly think that Macy's could disappear overnight, well, then you probably believe that magic bullet theory also. Okay, how does the max loss work? Yeah. Winner 86, Chemex. How young are you? Are you? Jerry, stop that. Behave yourself. Alright, Wildcat Sam. Hey, James, everyone. Sorry I'm late tonight. Was getting the kiddos ready for the first day of school tomorrow. Cool beans. I remember those days. Okay, I actually remember going to first grade, coming out of the house, because I actually got the bus at the end of the driveway in first grade, because they did. I come from a small town. Okay, small town. The bus driver for the little kids, yeah, they'd stop right in front of the street and wait, right in front of the house and wait for mom to bring us up. I remember that. That was a long time ago. Some fond memories. Also some crappy ones, you know. But I remember the first day of school. I remember the first day of school for my son. Okay? Saw the bus come, opened up the door, bolted right up there. He couldn't wait to go to school. Congrats, Chemex, Little Rose, you're wonderful. Thank you. Oh boy. Okay, you guys. All right, Jerry, behave yourself. Chemex, you be nice too. GFs doesn't pay dividends. Okay. I might be interested in claiming you. You can say clean showered. All right. That's why I don't have one. It's a liability, not an ass. Oh my goodness. All right. How do you roll it over? Oh, that's a good question. That's a great response to a question I had too. Thanks for clarification. All right, Wildcat Sam. Don't know quite what the question was, but I guess it's out there. All right, Geraldo. Getting into the trade is easy. Risk management, like you explained, for AEO is key. Thanks. Well, Geraldo, is it Geraldo or Geraldo? Thoughts on PPG? SJ, we already did PPG about an hour or so ago. Yeah, I'm going to have to agree with you. Risk management is very important, because you know that green-headed monster can send you astray, and the green-headed monster, for you guys who don't know, is greed. Okay, because it took me years to get over that. Yeah, okay, you joined late. Sorry about that. Okay, greed is one of those things that keeps whispering in your ear. Hey, do this. Look at that. Everybody's doing it. Everybody's talking. Yeah. It's very challenging, especially when you're looking at a trade, right? Let's get rid of that. Okay, so when you're looking at something, okay, the chart tells you yes. Everything's telling you yes, and then you get down to the numbers. Finally, which strike price do I choose? Well, the stock is currently at 1577. I can do the 16s and get this percentage. Great. I can do the 1550s and get this percentage. Great. Let's get rid of that one. Currently it's at 1577. So if I like the 16s, I'm getting this. Well, that's a certain percentage. If I do the 1650s, well, I'm getting this percentage. Well, that's even better. Now, if I do this one here, well, I'm getting this percent. Now you get three different interest rates. Not interest rates. Three different numbers you're going to look for. All right. Well, do I like the 1550? Do I like the 16? Do I like the 1650? Each one of them comes with risks and rewards. The further into the money you go, the less profit potential you're going to make. But the safer the trade. There's the trade-off. Safer trade, less return. Okay? A riskier trade, which would be the 1650s, because you're getting premium and you're getting capital appreciation if the stock goes up. Great. Everything comes with a trade-off. Do I want a safe trade with a lower interest rate, or do I want a little bit more risk and get a higher interest rate? Okay? It will, it won't, maybe, kinda, sorta, maybe, I don't know. So that's a choice you have to make, and it's going to be different for everyone. Me, preferably, I would take one in the money with a less return, but higher rate of safety. Okay? So that's a question you need to ask yourself. Where's my balance? Safety as opposed to rate of return. Okay, in the money, John. Black teas. How did you learn when I first started? Yeah, when I first started, I was totally delusional. Call open interest minimum. No, I don't have an open interest minimum. Okay, I'm looking for simplicity. When I say simplicity, I want to be able to take an elementary school person and say, does this make sense to you? Okay, well, they can easily see, oh, here's the bottom, here's the top, well, here's where it is now, and look, now it's bouncing back up again. It goes up, it goes down, it goes up, it goes down. Okay, and then you go into strictly the numbers. If I'm buying it at this, selling at that, this is what I'm collecting, my rate of return is, okay, is when we become adults, we start asking other questions. Oh, what about the delta? What about the open interest? What about the time of day? What about this? What about that? And then it gets confusing, and then you second guess it. Okay, when you give it to a child and say, hey, if this is this, then you do that. If this is this, then you do that. If it's currently at this, going up, this will give you this amount, this will give you that amount, which do you like better? It is actually that simple. As we become adults, we make things more complicated than they need to be. That's why it was so much easier for my 9-year-old daughter to make money than it was for me. Because it was simple. You take a look at the calendar. Okay, whoops. I don't want to see all that crap. I only want to see this. Okay, you take a look at the calendar. Here's Clorox right here. Okay, there's CNA, Apple, Capital One Finance, all these companies here. These are the only ones I'm looking at today. Okay, I'm not looking at this. I'm not looking at that. I'm not looking at those. I'm only looking at this and only that. Okay, great. Well, those are the ones I'm looking at. So there's 15 of them. Wonderful. Now let's go over to the trade grid. Go over to the trade grid. Put it in. All right. Where's the high? Where's the low? Where was it? Where is it? Fine. Wonderful. Now let's look at the chart. Let's look at the numbers. It's kind of. Do you remember the paint by numbers? Okay, 1 was red, 2 was green, 3 was light brown, 4 was dark brown, so on and so forth. And then you take it, and then you painted the areas that were 1, and the areas that, and then you get this picture at the end. Well, it's the same thing. If the stock is paying a dividend, great. If they're paying the dividend for more than 20 years and increasing every year, great. It's on my list. Now it's on the calendar. The calendar says now I'm looking at it. Great. Now I'm looking at it. Where's the high? Where's the low? Where is it? See, this mess, all that crap, we create that. You and me, we're to blame for that crap. We decide, wait a second, it's not worth 23 bucks. That's why it's never hit 23. The highest it's ever got was 22.5, 22.10, somewhere in that area. Okay, when she gets down to 10, oh, wait a minute, it's worth more than 10. See, we already know where the bottom is. We already know where the top is. Anytime in between, yeah, it's a possibility. Okay, so let's move in a little closer. Get the real details. Well, here are the real details. Look, 30 days ago, that's where it was. Oh, there's the high. Look, it dips 3 times in the last 30 days. Well, I love gaps. Gap down 3 times. A couple of weeks ago, last week, and again this week. What happens to gaps? Well, they have a tendency to fill. Well, this gap here already filled. The next gap is this one. Well, that was going to fill eventually too. But it always, always, always comes down to the numbers. Does it make sense? Is it a good investment? This is your money. You've got to figure out what's right for you. What's right for me may not be right for you. Now, I'm just showing you a simple, easy strategy. It was created for a 9-year-old. Now, all you guys out there in the audience, you guys are over the age of 18. This shouldn't be that difficult. Okay, find a good company. Dividend king, dividend aristocrat, dividend champion. Make sure they're consistently profitable. How do you do that? Well, a portion of the profits goes to the investors. The simplest, easiest way to find out if they're profitable, if they consistently increase their dividends consecutively every single year. Well, that's where I want to put my money. I want to put my money in a safe company, someone that knows what they're doing and consistently does what's right for the company. Okay, keeps going up. Well, the shareholders don't like decreased profits. Well, we don't. All right. Looking forward to picking up some of your knowledge. Back tease. Well, alrighty then. Welcome to the show. LUMN. Pickled peanuts. Dude, I haven't seen or heard from you in a while. Nice to see you back. You really want to start out with LUMN? Because you know I'm going to say no. $5.38. How can this company possibly have 20 years of increased dividends? And look what happened in the last couple of days. That's definitely going to be a no. Okay? Now, she's like a buck last 2 or 3 weeks ago. 2 or 3 weeks ago, she was at a buck. Now she jumps up to $7. That's a 700% increase. Of course there's going to be profit taking. And I seriously doubt this company has 20 years of increased dividends, especially considering a couple of weeks ago they were just at $1. Okay, so hey, if that works for you, more power to you. Lily, you like that? Is business economics a good major in study? Does not. It really depends on what you want to do in life. There are certain college degrees that are worthless. Okay? Think to yourself. Go to the want ads. It's in the newspaper. You open it up and say, hey, what jobs are they looking for? Are they looking for business economics majors? Right, so let's keep on moving. Dino, what tips would you share to a beginner who wants to invest in stocks? My number one tidbit of information that might be helpful: patience. You can't rush it. All right. That being said, let's move on. What's your best opinion for someone with low funds to invest? Wildcat Sam. I would start off where my daughter started off with, dividend capturing. Dividend capturing, simple, easy. Go to your calendar. Let's pick Clorox. Okay, it's got a dividend on the 14th. Best time to get it would have been the 29th. Okay, so Clorox dividend is 122. Jump in it on the 29th. What would it look like? Oh, isn't that terrible? Okay, the Clorox, the 29th, dun, 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 right there. Okay, so had you jumped in on the 29th, over here, the opening price was 134.42. The dividend is 122. So 10 days before the EX date, okay, would have been the 29th. Well, what happened? She dipped a couple of days, then she shot up. Well, it went up before the dividend. That's called dividend capturing, or dividend capturing 2.0. You buy it 10 days before the EX date. The EX date is here, 10 days before the EX date, on a Monday, 29th. Okay? It jumps up, you jump out, say thank you very much, and you move on to the next one. That's just my humble opinion. That's not advice. That is just a little trick that I picked up over the years. Stocks have a tendency to move up. Okay, the equivalence of the dividend or more before the EX date. These little green dots are the EX dates. So, if you like Johnson & Johnson, 2 weeks before on a Monday would be the 12th. Clorox 2 weeks before would be the 29th. ExxonMobil 2 weeks before would be the 29th, so on and so forth. Okay, make sure that the chart is telling you the right information, because when you jump into anything, okay, it's up, it goes down, up, down, up, down, up, down. Look for the patterns. It's really not that difficult, because there's a bottom, top, bottom, top, bottom, top, bottom, top. All correlates with the dividend. The dividend's here. Great. When's a great time to get in? Well, a great time to get in is when a great time to get in is. You have to decide what is right for you. And it is 11:42. Holy cow, I'm going to turn into a pumpkin. All right. Best okay. Education, Sam. Lily. But you don't. Uh-oh. Lily just had something to say and it disappeared. Do you share that calendar? James, that calendar is available. I mean, this is Thinkorswim. You can download this for free. Okay? Just go to Thinkorswim.com. Appreciate your insight, James. You got the hard work. Thanks. Go to Thinkorswim.com. Download it onto your computer. Okay? Now, you can, from what I understand, I have not confirmed this, but I've been told they will allow you to use it for about a month or so before they want you to join up with Charles Schwab. Learn standard deviations in delta. It gives probabilities. See, James, I'm going to agree with you only because I've been doing this for a while and I'm an adult. But when I taught this to my 9-year-old, yeah, I could not get into the Greeks at all because it had to be simple. Remember, you got to always remember where it originated from. And I keep the strategy exact same so I don't deviate, so everybody learns the same thing. I consider this as a stepping stone. Find the basics, find the simplicities of it. Okay, a good quality company, buying at the right time, making sure the investment is right for you and getting a decent return for the time value that you put into it. Great. Once you get this down pat, this can make you 50% per year. That's a nice return. Nobody normally gets 50%. But after you get good at it, then you can throw in other stuff. Learning the Greeks, implementing cash secured puts, implementing other strategies, calendar spreads, debit spreads, credit spreads, other things like that. But start out with something simple and something profitable. This is simple, safe, profitable, consistent, and no way to lose your money if you stick to the rules. Never buy something you want. Only buy stuff you want to hold. Okay? Long term. Never sell at a loss. Consistent increased dividends to make sure the company's consistently profitable. Weekly options, because I want weekly cash flow. It's actually that simple. Okay? Now, 15-20 minutes a day, I make 1%. Now, one of my accounts has $100,000 in it. $100,000, 1% per week is $1,000 a week. If I'm putting in $20 a morning, 20 minutes. 20 minutes in the morning, every morning, 5 mornings, that's a little over an hour. That's about $1,000 an hour. Okay, and what am I doing? I'm taking care of my own personal money because there's not a money manager out there or a hedge fund manager out there that has your best interest in mind. Nobody has more interest in your money than you, well, except for maybe your ex-wife or ex-husband, whatever. I don't judge. All right, learn deviation. Yep, James, you're probably right. Why learn standard deviations in delta? All right. I'm not going to answer that one because it gets to be confusing. Now, there are a lot of people that are new here, and that's not something I want to throw at newbies. All right. Now, that's something for a little bit, what do you call it? A little bit more advanced traders. One standard deviation is 6.16 delta and has 84% chance win rate probability. Yeah, probably. Your residence, James, stock price volatility, square root, and days expiration, blah, blah, blah. Yeah, wow. Getting into the black shoal pricing methodology of freaking options. Yeah, no thanks. Good time to short them. Tune. I have no idea what we're talking about at the moment. I'm not smarter than a 9-year-old. Sorry, Jack. Can't help you out with that. Well, Jack, look at it this way. When she was 9, she wanted to learn the trade. Now, I had to make sure it was simple, safe, predictable, consistent, and no way that she can lose. Now, the reason why there's no way she can lose, because as much as I enjoyed the couch once in a while, something to be said about cuddling up with the wife, you know what I mean. Okay, sleeping on the couch is kind of like a punishment. It wasn't bad because it was quiet. Nobody hogging the covers. But, everybody in the house knew you were up Schitt's Creek. But anyway, needless to say, it had to be simple, safe, predictable, consistent. No way that she could lose. So it had to come up with the rules to make sure that it was actually that simple. Okay, so if the stock is on the chart for the week, okay, if it's there, well, then it's consideration. And we don't look at this and we don't look at that. We only look here. It's actually that simple. When you say, this is week number 5, we are looking at stocks for week number 5 and week number 5 only. Great. Well, you take a look at them. What, 10 stocks? Great. Take a look at the 10 stocks. Which one is best situated? Well, what do we want to look for? We want to look for the high. We want to look for the low. We want to look at how much am I paying for it? What kind of rate of return am I getting? And how safe is the trade? And then you have the biggest question of all. Does it make sense for me to buy this stock at this price at this moment in time? That's a big question, because there's only one person that is responsible for that, and that's you. You've got to figure out what is right for you, and it's different for everyone. For me, I have certain things that I want. I want a good quality stock. I want to be able to buy it, own it for a long period of time if I have to, and feel good about it. And then I still want to get that 1% on a weekly basis to be able to live comfortably. Okay, so, wow, we're really running out of time. TOS has all the Greeks. Yep, you don't have to do any math. Yep, you're absolutely correct. But it's always nice to know how to do it. Question on Instagram. James, I am curious about what you think of Nordstrom's. Well, didn't we do Nordstrom's? JWN. Okay, so we did Nordstrom's. 22.53, and the 22.50s are going for 40 cents. Well, that's well over 1%. Okay, even the 22s are going for 65. But you take 53 off that 65, and that leaves you with not enough. Okay, yeah, so the 22s is not quite cutting it, but the 22.50s are, and the 23s are both paying over 1%. Okay, great. A year ago, we're at 1939, bottomed out at 1716, topped out at 24. Okay, she drops, retraces, drops, finds a 30-day bottom. The 30-day top was 30 days ago. Now we're 3 days to the upside. Okay, 30 days ago, 30-day top, drops, retrace, drops again, 30-day bottom right here. 1, 2, 3 days to the top side. It looks good to me. But then ask yourself, let's take a look at seasonality. What does it normally do this time of year? Okay, well, it looks like she's going to shoot up for the next couple of days, which will take us into the middle of next week. And then from there, drops. Now, that's historical performance. Historical performance does not supersede trend, because trend is the current situation. It's like, what are we doing right now? Well, right now, there's the bottom. Now we're moving to the top side. And when you get to the top side, then she'll turn around and probably continue the downturn. See, she's going to go on the downturn at the moment. Why? She goes down, she goes up. She goes down, she goes up. Michael David Robertson, James Greeks for newbies. Uh-oh, missed that one, just disappeared. Stocks go up, down, and sideways. They don't care about what magic delta. I like that. It doesn't care what magic delta thoughts you might think. It is absolutely right. Okay, there's only 3 directions it's going to go. It's going to go up, it's going to go down, or it's going to stay exactly where it is. And some people call that sideways, and I hate that phrase, because they don't go sideways. They go up, or they go down, or they don't move at all. TUS has all the Greeks. You don't have to do anything. Yep, I know that. Question on Instagram. Got that. Got that. Moderate. Got that. Stifler's mom. Ooh, Stifler's mom. I'm new here. Could you tell me why you're so against SCHD? Let's open up the door for turd number 3, SCHD. And I'll tell you exactly why I don't like SCHD. Okay, so SCHD. I gotta end at a high note. Yeah, buddy. Here we go. Number one reason why I do not like SCHD is it is a monthly optionable stock. Monthly optional stocks means I can only do it once a month. Once a month means 12 times a year. 12 times a year means I'm getting 12 to 24% a year interest. Is that okay? For some people it is. I don't like monthlies. One is because you can only do it once a month. All right? I would prefer 52 paychecks per year as opposed to 12. That's reason number one. Reason number two, the numbers never work out. Okay, right now it's at 80.22. The 80 at this moment is going for 85 cents. And if I am wrong, I have to hold it for another 4 weeks. 4 weeks to decide where it's going next. Now, I really can't go by the numbers here because you got to hold it for 2 weeks. Okay, you're getting a little over 1% for 2 weeks. So you're getting 0.5% per week. Okay, great. What if I miss it? Well, the next one, the 80 is going for $1.90. Well, that's a little over 2%. But now I have to hold it for 5 weeks. So you can take that and divide it by 5. Then you're less than 1% again. And then I have to guess, where is it going to be in 6 weeks? You see where the chart is right now? Okay, here's where it is right now. Now, I could probably give you a good idea where it's going to be the next 5 or 6 days. Look as it looks. 30-day high, 30-day bottom. It's going to go to the upside. Great. But is it going to do it for 4 solid weeks? Okay, it may go up a little bit, turn around and start coming back down again in 4 weeks. How the hell am I supposed to know? It's challenging to figure out where it's going to be. That's 22 trading days in 1 month. So 22. Is it going to go up 22? No. Who knows where it's going to be in 4 weeks? I don't like that. But wait, it gets worse. Okay, so now we're actually going to go to Yahoo Finance and put an SCHD into Yahoo Finance, and then we get to some statistics, some actual meat and potatoes to this little menagerie. Okay, right here, you check this out right here. Look at the yield you are getting. 3.43%. So you're taking your money, you're tying it up for a whole year to gain 3.4%. 3.4. Okay, now I've been on here since January showing people how to get 1% per week, yet you want to invest and get 3.4% per year. Okay, so that's reason number 3. But wait, there's more. Okay, now I want to go to historical data. Now, historical data is going to give me all the highs, lows, openings, closes, blah, blah, blah. But what do I want to look at? I want to look at how often do they pay the dividend and how consistent are they with their increases. Okay, so let's go back. Wait a second. That can't be right. All right, let's go try this again. I want to look at the maximum amount of dividends that they've paid. And apparently, they've only been paying dividends since 2011. So we're in 2024, so they've only been increasing for 13 years. So let me ask you this question. You got a company that's been in business for 13 years and paying out dividends for 13 years. Or would you prefer a company that is 100 years old and has been increasing their dividends for 50 or 25 to 50 years? This one's only got 11 years. Okay? So let's take a look at the dividends. We start out at 12 cents. Jump to 14, go to 21, to 26, to 20, to 23, to 25, 28, 30, 30, 30, 33, 35, 40, 37, 41, 35, 39, 40, 60, 50, all over the place. No consistent increases, but they're okay. You know, they're not absolutely horrible, but there's no consistency in the increase. Look at December 2021, 62 cents. March 2022, 52. They dropped it 10 cents a share. Well, were they not profitable that year? What was the reasoning for the cut in the dividend? And then they went to 70 cents a share. Okay, great. Then they cut it down to 64 again. Can't they make up their minds? Then they jumped to 70, then they dropped to 60, then they went to 67, then they dropped to 66, then to 74, then to 61. There's no consistency here whatsoever. How the hell do I know what they're doing with the money? Okay? Now, I can get a company like Microsoft. They increase their dividends every single year. Consistently. And if you could pick a decent company, kind of like Microsoft, let's pull it up. just for the fun of it. MSFT. Now, take a look at the numbers for Microsoft. The exact same time frame, 2011 is when they started paying. So they've been paying for 13 years. Okay, 20 cents, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently increasing every single year. So you ask the question, okay, what is it I don't like about it? One, they don't consistently increase their dividends. Two, they get a crappy premium. Okay. Three, they have monthly options. Four, the consistency with their increases is horrible. And they've only been paying for 11 or 12 years. How many more answers do you need? That's a bunch of reasons why I don't like SCHD. Jack! Alrighty. Alright, James. Alright. Almost done. I enjoy your education and comedy. How do we join the morning session? David, how are you today? Alright, David. Let's go on over, whoops, to here. The 10-minute trader. Now, hypothetically speaking, David, the top left corner of your screen, you'll see a little square with my face on it, and it'll say dividend stock talk. Yeah, if you click on that, that'll bring you to the bio. You get two options there. One, give you a little tiny envelope. You can send me an email or a text message, whatever. Or the second one is a link to the 10minutetrader.com. Now, 10minutetrader.com, if you go to Google and you Google it, you will see that I've owned it for over 20 years. Okay, I have been around for quite a while. The 10minutetrader.com is right here. Very first thing, very first page, right there. Trading live online. You can click on that and that'll take you right to the Patreon, where you sign up. And look at that, lo and behold, dividend stock talk with, hey, picture of me. Same thing. Now, back to here. Now, if you want to slide down a little bit, there's a video right here explaining the no risk, because I personally don't think Coca-Cola is going to disappear overnight. Okay, some of these companies have been in business for over 100 years. Consolidated Edison, 200 years old. Okay, they ain't going anywhere. Okay, so down a little bit lower, right there, learn more about the simple trading strategies. This should bring you somewhere, I don't know where. It's a brand new website. Not get it updated. Okay, now the original website's been like 15 years old. This is just updated. Live trading group, the morning trading group, right there, see it? Now, if you're kind of curious, look at this, view all. View all will show you all my trades I've made so far this year. Okay, so if you have any questions or you want to see anything, pick a week. Here, week number 19, the 6th week of the second quarter. These are all the positions I have. The greens are the buys, the reds are the sells. If you know how to read them. Way over here is the time stamp. Tells you over here what kind of a trade it was, the buy, the sell, how many, the stock symbol, the call strikes, the price fills, all that kind of nice stuff. They're all there. Okay? And you know I came up with recently, you don't like this. Nope, that's not it, that's not it. That's not it, that's not it. Right here, here we go. Check this out. Look at this. I came across this. Nope, wrong one. Sorry. I came across some trades from 2013, 2014. And I'm trying to figure out how to move them from my old website onto the new one, just to show you guys how long I've actually been doing this. Because I have trade confirmations just like this. See these right here? It tells you what I'm buying, what I'm selling, the prices and whatnot. I got those all the way back into 2013, 2014, 2015. I think I might even have some back on to 2011. Show you some of the trades I made back then and with the interest rates I was making back then. Okay, I'm still making the same ones. Okay, so here, this is not the only thing I wanted to show you. If you come all the way up, whoop, wrong one, wrong way, right here. Very first thing you're going to see is the YouTube channel. That's all my social media. You can go there and find all that stuff. Now, I want to take a look at the videos right there. And I'll go to the oldest videos. You're going to get a kick out of this. You ready? There's the princess when she was 11. Now,
JC and Pete, as you being part of my internet website company, which my dad couldn't call that, but I do. Being part of
do I
that,
understand you correct that you like the numbers, but you do not like the chart regarding JWN? Ooh, Cody, give me a minute.
You would the best for money.
That means every single day you can buy different stocks. Every single day there's a different company paying out dividends.
You got to remember, I had to keep an 11-year-old entertained, so it was a fun game for me and her. We had a lot of fun. A lot of fun. She's a little stressful once in a while. When I said, "Well, come on, honey, you got to make your trades," and so every once in a while she said, "I'm doing my trades, Dad." All right. So anyway, that being that. Oh, so that's how you. Long story short, David, that's how you join. Sleeping on the couch is not good with my sciatica. Yeah, I hear you. Michael. But our James here used it, so I spent hours on the phone to make Schwab teach me all the time. They have a whole bunch of neat things. Matt, what about JEPQ? Oh my goodness, JEPQ is almost the exact same as SCHD. Okay, it's just another turd, in my humble opinion. Okay, take a look at what you're doing. Okay, you're giving your money to a computer, and don't think you're not. An ETF is an electronically traded fund. Don't give me that exchange traded fund crap, because we all know the exchanges are all electronic. You're giving your money to a computer, and it's giving you what it's giving you. JEPQ. JEPQ. Okay, it's giving you a 9.16% yield. That's number one. The historical dividends. Okay. 2 years. That's it. 2 years of dividend payments, and you want to put your money into it. Okay, 2 years ago it was 38 with 34, 41, 55, 38, 68, 55, 58, 44, 43, 45, 48, 36, 37, 45, 42, 34, 38. Yeah, it's all over the place. No consistency whatsoever. Okay, if I'm giving my money to someone to invest for me, which is basically what we're doing. We're buying stocks. We're giving the company money, our money, for them to invest and to make and to continue running a business. No, that's what we're doing. Okay, our profits is the dividend or the accumulation or the stock appreciation. Okay, it depends on what you're going in for. Okay, it is easier, okay, and less confusing and less stressful if you figure out what you want to do before you do it. Okay, are you buying the stock for capital appreciation? Are you buying it for cash flow? I mean, what are you doing here? Okay, me, I'm not hiding anything. I'm buying a stock capturing the 1% and I'm jumping on out. Okay, I like the stock and I'll keep buying it over and over and over again as long as it consistently pays me. Okay, we're getting close. We're past midnight. Oh man, I'm turning into a pumpkin. I'll catch you guys later. Got it, thanks. TSLY is a no. That video was funny, thanks. Girl dad, yep, thanks. You have an echo? Yes, I do. Okay, so you guys have a great day. I will see you again tomorrow. Now, those of you guys in the morning trading group, remember, in the morning trading group, we're going to be here at 3 p.m. tomorrow. Okay, because we want to make sure everybody has an opportunity to check their positions before the market closes and before all those options expire. Okay? Have a great night and catch you guys tomorrow. I'll see you tomorrow. You're always a day away. La 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 la. Do I actually sound that lame? Ooh, you guys have a wonderful time too, and I'll see you guys again tomorrow.